Good morning, everybody. Good morning, Cav, Chris. Nice to see you. Guys, how we doing today? Lyle, Ron, Hammond, Cav, Walter, Josh, the Gars, Adriana, Chris Smith Farms, Stuzio, and Bill. It's nice to have you guys in here. How's everyone doing today? Did you guys have a good weekend? I hope you did. Had a lazy weekend. Not too lazy. Had a lazy yesterday. A lot of fun, a lot of relaxing. I thought I was going to get the new software yesterday, but there's a couple little tweaks that need to happen to make it 100% perfect. And one of the things I appreciate about my brother is he won't give it away if it's not 100% perfect. He's not going to jump the gun. So I actually sat at my computer and he's like, come on, let's go. And then it didn't. So he's anxious to get it today, but he is teaching a master class. A snow weekend, Cav? Man, it was beautiful here yesterday. We were, I think, in the mid 60s and sunny. We've got a lot of cold weather on the way. But our cold weather's nothing like your cold weather. Not at all. 12 inches in Western Mass. God, that's crazy. Not gonna lie, I don't think I could live like that. I really don't. I am such a sun seeker. I like the outdoors and I like to be warm. I've got so much going on with arthritis and surgeries and all that good stuff that the cold just doesn't feel good. It'll all be gone by the end of the week. That's how it was in Colorado. In Colorado, we'd get a big snow, and everybody would be like, "Whoa, look at all the snow!" And then, like 3 days later, you would never even know that it happened. So, I think that that's at least a redeeming quality about some of those snowy states. All right, guys, let's get to work. Hoping some more people jump in here. I know we've got new people, but they don't seem to be showing up. It's hard to learn if you're not here, right? You guys are here. You guys are learning. I'm sure a lot of you have gotten to the point, I'm hoping, where you're like, you know what? I got a pretty good idea of my rules. I know what I'm looking for. I know the trades that I'm going to be taking, and now I'm just going to commit to them, and I'm going to get that feedback, and I'm going to make sure that I'm taking the trades that I told myself I would take. That's kind of what we're doing, right? Um, but before we do anything, guys, as always, let's go to forexfactory.com/calendar. Let me get this link in the room. It is just now 9 a.m., so we're good. But I'm checking news every day. I'm making sure that I'm not trading into news, and that's it. I'm not worried about what news says. I have absolutely no interest or investment into what they're saying. I just want to know when they're saying it. I want to know when these guys are releasing news. And what it does for me is that it lets me sidestep and stay out of the way of any potential emotional reactions that there may be to news. At noon, we have FOMC member Bostic speaking. It's probably going to be low impact. Bostic isn't the cool kid, and whatever Bostic says doesn't tend to move the market, so they gave it a low impact. 3 p.m. consumer credit. I'm going to be done long before 3 p.m. I'm not even worried about that. But I'm looking each and every day and I'm trying to make sure that I'm not trading into potential news. Always looking for these high and medium impacts. And we really don't have anything going on until Wednesday in the 10-year bond auction. So slow news week, which is okay. And then, hey, good morning, JW. Hopefully, I've got some new people in here. Guys, if you need the help, this is definitely for you right now. I want to talk about getting to where you want to be. Because really, um, if you're not on some sort of path, if you don't have a goal, well, then we need to fix that. But becoming a confident trader ASAP, I think that's everybody's goal in here. Getting to the point to where everything is easy enough to be consistent, to where you're comfortable enough reading your indicators so that you can make good decisions. That's kind of what the goal of the classroom is. I don't create day traders in here, guys. I create chart readers, and from the chart reading, from a solid plan, you become the day trader. But your path to becoming a confident trader ASAP, guys, it starts with posting your trades in the class. And this is one of the most important things. And Andy, I know you've been working on it. And look at that. Boom, boom, boom. You are getting it down. So we'll talk about the analysis later, but good job. I know that you were working on that. Guys, this is the link to the screen capture, how to do it, how to get in the room, how to make sure that you're getting the best feedback. And that's the whole goal, is for you to get feedback. And it begins with posting your trades in the class, telling me everything that you're doing. And as you work on your rules, guys, telling me what you may do, what you're doing may just simply mean everything was green, Mark, so I took a long trade and I got run over. Or, hey, Mark, everything was green, I took a long trade and I won. It's amazing. Um, and then we'll start breaking that down into what are the advantages, what are the disadvantages. And that's one of the biggest things is every time you post a picture, what you're doing is you're saying, hey, Mark, I want a private session. I want you to take a couple minutes to look at my chart, to read my thoughts, and to give me a little bit of feedback on it. Because the most important thing that you can do as a new user is understand what you're doing right and what you're doing wrong so that you can continue down the right path and you can avoid the things that may be creating challenges. Is there anyone in the room that needs a little help with the capture software? I brought mine up, but I'm seeing a lot of the names that I've seen before. Is there anyone new in here? Raise your hand. Let me know. If you need a little help capturing pictures, annotating charts, let me know. I'd love to get that done at the beginning of the classroom, but it looks like everybody's good and that strong, awkward silence, so we won't worry about it. The next thing that you do to become a confident trader, guys, is use your spreadsheet. Nexgen gave you a spreadsheet. I give it to the classroom every day. There's three tabs to the spreadsheet. The first one is your trade tracking. Every time you take a trade. So Andy, that picture that you just put in the room, it should be going into your spreadsheet, right? And you should be talking about how you felt. Did you have a strong top or bottom? These are lessons that come from the classroom. What were your advantages? Hey, good morning, Miss Cindy. Did you win? How'd you do? What kept you in? What kept you out, right? And then this end section, hey, GWC, is where you're going to type in the feedback that you get. So sometimes you may post a trade in the room and you're thinking to yourself, gosh, I did everything right and I feel good about this and this was the best trade ever. And you post it in the room and that jerk Mark is like, man, I want you to notice this termination condition. I want you to see this big line. And this could have created a problem and that may be what contributed to that bounce that took you out of this trade. When you get that feedback, drop it into, hey, Miss Debbie, drop it into the notes section. And then what you're going to do to get to where you want to be is every day I want you to go back to that first tab on your sheet. And I want you to look at what you did yesterday. I want you to get in the habit. Pour a cup of coffee, let your charts load. You just finished news. This takes about 3 minutes. But when you go through these pictures, you'll be able to ask yourself what worked, right? Because what works, hopefully, is the basis for your plan. What's providing winners, right? And how do I repeat it? And that's one of the biggest reasons that I have you guys annotate charts outside of telling me what you think, is it creates a repeatable situation. It creates an opportunity for you to do the same thing, the things that are bringing you success each and every day, because that's really what we want is consistency. So then you have to ask yourself, what didn't work? What am I doing that isn't helping my cause? A lot of times, maybe it is not having the correct momentum, or perhaps you trade into termination conditions. Everybody has a thing. I have a thing, you'll have a thing. The more you post in the room, the quicker we'll identify our things. Um, Ask yourself what felt easy, what felt forced. Guys, this little historical study each and every morning, it will set you up for the day because it's fresh on your mind. Yesterday, I broke rule number 2 5 times and it didn't serve me well. So today, I'm really going to focus on not breaking that rule. Or yesterday, I found that even when I made mistakes, momentum carried me through those mistakes. So today, once again, I'm going to make sure that I have momentum. And these are concepts that we're going to talk about during the day. This will accelerate your learning, I promise. I've watched it happen with everybody. So don't be afraid to post in the room. Get that feedback. Feedback's going to take you next level. And then give yourself feedback. Go through, use that spreadsheet each and every day. We're going to take the first hour today and the first hour of every classroom. And you guys are going to learn the trigger line and the Fibonacci rules for when it's okay to trade. And that is the beginning of what we do, is we spend just a little bit of time, and I'm going to go back to the education page. Let me click on my link here. There we go. Right here in the tutorial section is where you're going to find anything and everything that you need. Right here in the tutorial section is going to set you up for the day, guys. It's going to give you all of the rules. It's going to give you what you're looking for, pictures of them, examples of them. But what we're going to talk about, and I'm going to go down to the glossary of common terms, is a high probability trade, a high probability trend trade to be specific. And this high probability trend trade is a trade where each indicator on every chart agrees for the trade. Um, it is a trade that typically wins 70 to 80% of the time when it's the way that it's taught. It's a trade that creates an awful lot of confidence through the memory of success. Hey, good morning, PFI. Good to see you in here. There's going to be the strongest triggers, the most advantageous momentum. There's going to be nothing between you and your targets. Guys, I'm going to tell you right now, the high probability trend trade should be the basis of your plan, the foundation of your plan, the one trade that you resolve to never, ever, ever miss, because the high probability trend trade, in your study of it, turns you into a chart reader. And that's exactly what we want. We want you to be able to open up your workspace, to look at your indicators and to say to yourself, hey, this is where the market is most likely to continue, and this is where it's likely to go, and this is where it's likely to stop. And these three things are what's going to take you on to the next level. They're going to take you on to more trades. It's going to take you on to bigger profits. It's going to take you on to better management. So the idea is that we become chart readers before we ever become traders. And the high probability trend trade does that for you guys. It gives you the skill set to do this because the high probability trend trade, what we're about to learn the rules on, only has three rules. And it's a very concise plan. It's a very easy to learn plan, I believe, because these three rules, each is designed to provide you an advantage. And I speak in advantages all day long. I want you to learn to speak in advantages. And rule number one provides the advantage of momentum right here in yellow. Rule number two provides a clear path. And rule number three provides an entry area. These three rules, these three advantages, guys, that's the recipe for a trade. So you're going to be able to read your charts to recognize the advantages. Your chart reading is what's going to get you into a trade, not your hope or desire to be in a trade. These three rules, I'm a big fan of simplicity. You'll hear me say it a lot. We're going to find them on two charts, guys. We are going to avoid the temptation to keep adding things on top of this simple trade. We're going to use a large chart and a small chart, and the numbers are irrelevant. Doesn't even matter. The workspaces are built for you. Your large chart is a broad stroke of a brush. Your large chart is a slow moving chart. It is like a freight train going down the tracks, East Coast, West Coast. And this broad stroke of a brush shows the overall opinion of the market. It shows you what the people in charge want to have happen. Just a little FYI for you guys that aren't in the know. You are not in charge of the market. You are not a market mover. The market doesn't really care whether you want it to go up or down. People with deeper pockets and much larger investments in the market, these are the people that are creating all the things that give us our advantages. So we're just going to look at our large chart because really the large chart is what the large crowd wants. It's what the people that are in control want to have happen. And we're going to go with the flow rather than fight it. So the large chart, one bar, the most current bar on the large chart will be used to define direction, momentum, and areas. Your first two rules will happen on the large chart, and when they're met, and we will break them down individually, rule number one will give you the advantage of momentum, and rule number two will give you a clear path, nothing between you and your target. It's these rules being met that has you looking to the small chart for an entry. And once these rules are met, we'll go to the refinement chart. This is a smaller, faster chart. This is a chart that in 15 to 30 bars, it's kind of breaking down what's happening inside of that one large bar. So we use this, and you're going to refine the market down to the point where it is most likely to continue. And the small chart is what the small crowd wants. It's that little group of people. There is this little group of yahoos that are like, hey, the people in control want it to go up. The people in control establish momentum. The people that move the market aren't reacting to any areas. What do you say we go the other direction? These guys get run over all day long, usually by next-gen users, but we rely on them for just a little push on that refinement chart because we're going to use it for rule number three to get into the market where it's most likely to continue. And by doing so, it will allow you to reduce your risk dramatically, and it'll also allow you to increase your profit potential. Excuse me. So we're going to go two charts, guys. As you grow with the software, as you mature with the software, as you become a chart reader, you will probably add additional charts, give a little extra information, Get good at the easy stuff before you try to make it difficult. And we're going to focus on three rules today. Three rules, two charts, one trade. Let's become chart readers. And you guys simulate. You should already know NinjaTrader allows you to trade the market on a simulated account as though it were live. You're looking at the exact same movement that I look at when I trade live. You're looking at the exact same prices, the exact same ticks, the exact same time frame. The only thing that's different is there's no risk of financial loss, and all you're doing is practicing. So simulate your trades and then post those trades in the room and say, hey, Mark, I took this trade. How am I doing? Hey, Mark, I saw this on the chart and I'm wondering what it means. Can you help me out? The idea is that we want you practicing the correct trades, not the wrong trades. We want you focused on following the rules, not breaking the rules. Because when you win and the rules are broken, it's this short-term victory, and it feels good, I'm not going to lie. But it sets you up for long-term failure because you want to follow a set of rules that provides a statistical advantage that has been proven over time, repetition, back study, practice to win more than it loses. And that's how great trading plans are developed. And speaking of plans, we're going to simplify your trading plan today. We're going to focus on that high probability trend trade. And I will introduce you to a medium probability trend trade. And a medium probability trade means that most of your indicators line up for the trade rather than all of the indicators. But a small issue exists. Not a lot of issues, just a small one. And you're going to have to manage a little more assertively than you would a high probability trend trade. Your ability to read your charts is going to allow you to manage a little more assertively. Your ability to read charts is going to identify what that problem is. And what you'll find with a medium probability trade, I'm going to give you the most solid plan I know how to give you to take it. What you will find is that they're not typically home runs. You're going to get in, you're going to take quick profits, you're going to get to a zero loss level as quick as possible, and make sure that you're erring on the side of safety. So you guys got to learn these looks. I know it feels like work, but you need to start taking pictures, guys. And that's where the second page of your spreadsheet comes in. This is your favorite looks. Every time you take a trade that fits the rules, every time you take a trade that has more advantages than disadvantages, that's been proven to win more than it loses, what you're doing is you're creating your trading plan. So this second tab allows you to put those pictures in there so you know exactly what you're committing to. You know exactly what you're looking for each and every time you take a trade. You're going to put the picture to charts and you're going to talk about what you see so that you can repeat it each and every day. This is just a client's and this is the perfect trend trade. This is exactly what we're teaching today. And then to get that recognition, the third tab is about 275 employee client pictures. In this section, guys, I've put together the entry sequence for looking for a trade. I've put in management sequences for managing trades as a new user. There's about 275 pictures of entries in the green section. There's ideas on management because great entries create manageable trades, and that's really the goal, is to get you into the market in the right spot so that you can manage it, so you can manage your risk before you manage your profits, so you know when it's appropriate to get out. There's patterns that repeat themselves each and every day in the market. The trade setup that I'm teaching right now, the high probability trend trade, it's just a pattern that happens every day, every market, every time frame. Guys, it's a pattern that happens whether the market is going up or down. You can make money both ways. It's a pattern that you can use in your stock portfolio. I have people that trade options with these patterns. I've actually had farmers that hedge their soybean crops using these patterns in the market. So pattern recognition is huge for what we do. So when you start seeing the same thing happening over and over, and you will, take a picture, write down what it means to you, get it into your spreadsheet, study it every now and then. And then a whole section on what we call termination conditions. And these are the areas that kill trends. This is the most broken rule. You guys should be taking pictures of termination conditions all day long. Whether it's a trade or not a trade, take a picture of a termination condition, label it termination condition, and really commit that look to memory. And then we're gonna get it done, guys. We're gonna learn the rules. You guys simulate. First hour is all about rules. Second hour is about reading your charts, talking, answering your questions. First hour is kind of a lecture. Second hour is very much where we're going to talk about everything that you're doing. Good morning, D-Rock. So if you post a picture in the room and I'm in the middle of the rules, please understand that that I'll go back to your picture. If your picture is about the rule that I'm discussing, maybe we're talking about momentum and you're a little clear or a little cloudy on it, and you drop a picture and go, hey, Mark, write it in there. Is this the momentum that you're talking about? Let me know because I'll look at your pictures as they pertain to the rules, but we look at your trades after the second hour, and what we do is we talk about whether or not they have the advantages. No matter what type of trades you take, we're going to talk about advantages a lot today. Every time we look at the chart, we're going to talk about the advantages that we have. Um, Totally lost my train of thought, but that's okay. Let's get to rules, guys. Let's go to rule number one. Remember, each rule provides an advantage. It's the accumulation of the advantages that create a trade. Rule number one is large chart. Remember, everything starts at a large chart. The slow chart, it must have strong trigger lines. And in order to have strong trigger lines, you have to be trading with the direction of the market. Remember, the large chart defines direction, and it's really simple. If the background is green on your large chart, if I'm looking behind that first bar and the background is green, the color behind it is green, I'm in an uptrend. I'm only looking for rules to be met for high probability trend trades long. If the background is red, I'm in a downtrend, and I'm only looking for rules to be met for high probability trend trade short. It almost seems too easy, right? How could just embracing the color and trading with it make me a better trader? Guys, it can, because every time you go with the direction, you're going with the people that move the market. You're going with the people that establish that direction, that are creating momentum. And we used the analogy the other day. When you're going with the trend, guys, it's like sitting in the inner tube in the lazy river, right? You're cruising at the MGM, you got your pina colada, and it's zero effort. But the second you stand up and try and go against the flow, maybe your wife is 6 inner tubes back hitting on the lifeguard, it's tough. It's a tough push, and it's hard to go against that established flow. So let's go with the flow. And then once you do, let's make sure that we have the momentum to carry that flow on. The only way to have momentum, the only way for rule number one to be met is for all the colors to match. If the background is green, your small triggers, the solid lines, should be green. The large triggers, those dashed lines, they should be green. And if they're not, you don't have odds favorable momentum. It really is that simple. So odds favorable momentum, guys, strong triggers means that your small triggers, these solid lines, have broken above in an uptrend. Your large triggers, these dashed lines, and created space. They're like scissors that have opened up, ready to cut. When you have odds favorable momentum, when you have strong triggers, this is a market that's likely to continue in the direction of the trend. This is your fully loaded freight train pushing to the upside. It's tough to stop. In a downtrend, small's below the large are wide. Look at the space between the two, guys. This is your best of the best look. This is the advantage of momentum. This is the one that will push the market in the direction of the trend more often than not. This is the look that will break those Fibonacci areas that'll carry you to the next area. And this is the look that's going to cover some of the mistakes that new users make, because when you have that momentum, it is very difficult to stop that market. Notice that the acceleration starts, the momentum is increasing, and it kind of peaks, and then it begins to come back. And as those small triggers begin to return to the large triggers, you are losing momentum. And when they work themselves back inside of the large triggers, guys, that is what we call a weak trigger. That is no longer strong. That is the opposite of strong. And if a strong trigger will push the market in the direction of the trend, well, then a weak trigger is a crapshoot. Anything could happen up or down, guys. And you'll see these weak triggers precede reversals very often in the market. And it's a pretty easy concept. Let's go back to the market. This is crude oil, and the background is red. So I'm only looking for rules to be met for high probability trend trade short. And my small triggers are below my large triggers, and my large triggers are wide and they're angled in the direction of the trend. Guys, rule number one is met on this crude oil chart. Most current bar is giving me that information. Give me a Y in the room if you're with me on this one, guys, because this is a very key concept. And I want you to see something. When I have odds favorable momentum, that's the most advantageous time for selling a pullback on the smaller, faster chart. This is what we use the refinement chart for. Do you see that one bar? All of this information, watch this, if I circle the one bar, if I stretch that out, all of this information is contained inside. So when I have odds favorable momentum, that is the most advantageous time, the most favorable time for selling Fibonacci resistance on a smaller, faster chart, or buying Fibonacci support on a smaller, faster chart. You'll see them as these tails or these wicks on the large chart. But just as we just saw, when that tail appears to be forming, it's really a pullback to an area inside of favorable large triggers. And that's rule number 3. I'm not going to get ahead of us. But know that when you see momentum and you see one of those tails, it may be a potential entry. And you're going to see these all day, and you're going to use them to study, to go back and back test. So rule number 1, guys, the advantage of momentum. It's not going to happen all day, every day. The market is a fight between the powers that be, and sometimes they're going to provide momentum and it's going to push that market down, and the momentum begins to wane. And notice that I have it labeled ACH. Anything can happen. I'm reminding myself exactly what it means when I no longer have strong triggers. From ACH, look at the reversal. Anything can happen, and it did. The market decided to go up, but when it went up, momentum was created. There's one of those tails. That's you guys getting into the market right at the bottom of that tail where the market is likely to continue, and all that momentum carries it up right until we get those weakened triggers again. There's another reversal, produces odds favorable, another tail. You guys are making money because you're so damn patient. And then we get here. Probably bounced off a fib or a mid-band or something like that. But notice how the background is red but the small triggers are green. It's impossible to have odds favorable momentum if the trigger lines don't match one another. It's even harder to have it if the trigger lines don't match the background. This is a transition phase, guys. This is where the buyers and sellers are fighting. These are where the people that run the market can't figure out who's going to make it move. You'll see this in between Fibonacci areas. You'll see this happen where potential tops and bottoms are coming in. But rule number 1 keeps you out of this fight. It keeps you from predicting what the market's going to do, and you simply wait for them, the people in charge, to create the advantage of momentum again. This is where a lot of people are tempted to predict, and I know that I've done it, and probably most of you in this room have done it, where you're like, man, it's not perfect, but I think it's going to go up because the background's green. Let me take a long trade. Let me take another and another and another. And how many longs can I try until everything finally lines up? So if you learn to sit on your hands when the rules aren't met, and you really kind of embrace the idea that the only thing that's ever going to get you into a trade is having your rules met, what it does is it keeps you out of this transition phase. You wait for somebody to win the fight, and eventually they will produce odds favorable momentum again. So is everybody good with that idea? Smalls below the large, the background is red. Guys, that's rule number 1 met on crude oil. On the NASDAQ, the background is green. The smalls are above the large are wide. Guys, this is momentum, the best of the best. And look what it's doing to that key Fibonacci area. Momentum can break areas. It's not guaranteed to break an area, but it's a lot more likely to do it if it's odds favorable rather than weak. Look at the weak triggers as it comes back in. And then on the S&P, the smalls are pinched. They're not wide. The large are up. The trend is up, but that's not my best trigger look. That's not wide and angled in the direction of the trend, not the way it is down here. So on this most current bar, I'm saying, man, the advantage of momentum is gone. Let me sit on my hands. Let me wait and see what's going on. So pretty easy lesson. I think rule number 1 is the easiest lesson that people get, making sure that you have the advantage of momentum. But once you do, where's it at? There it is. You have to have a clear path. What's a clear path? A clear path means that you're not reaching any of the key areas where the people that move the market are making decisions. I stress a lot in this room that you're not in control, and I think it's important because it makes it easier to accept that you have to be a little patient, that 90% of your day is chart reading. Areas where the powers that be may react, guys. Fibonacci resistance, those red lines, you know about them typically hours in advance. Fibonacci support, the blue lines, you have the same heads up, guys. These don't sneak up on you. Yellow 1-to-1s are just fibs that print real time during the day. It's 100% fib alternate. You don't need to know that. What you need to know is that this is where buyers may buy and sellers may sell and profits may be taken. So we're going to respect it as an area that has the potential to stop the market. We're also going to look at divergence high lines, this magenta line. It's dashed and it prints from a pivot. If the market goes up and down, and in this case, the buyers were in control, the buyers had momentum, everything was screaming to the upside, and the sellers pushed hard enough to steal their momentum. It's a loss of momentum. That's all it is. We can see that loss of momentum like a line in the sand. It's a magenta line that comes right off the top of the pivot. And the same thing on a low. If the sellers are just cranking to the downside, and somewhere some buyer with deep pockets said, you know what, I want your momentum and I want it to go the other way, you'll see this divergence low, this cyan line. This line off the end of a pivot represents a loss of momentum. That's it. That's all it is. It just lets you know that the opposing force gave a little shove. We're going to use these lines to determine whether or not we've reached an area where the market is likely to stop, whether or not they've taken away our clear path. And we're going to be able to do it right here from the user guide. And I'm going straight to the tops and bottoms, the termination conditions section. And I'm going to give you the recipe. The recipe for a termination condition. The first thing that has to happen is price must reach the area. These areas are where decisions are made. Can I post the checklist? Yeah, no worries, man. Um, these are areas where buyers may enter the market, where sellers may exit the market, where buyers may exit the market. These are the areas that may reverse the market. These are the areas that might break if there's a ton of momentum and the opposing force isn't interested. This is also the area where fights can happen, where you might see those wonky triggers. The reality is, guys, is we just don't know. We don't know definitively whether or not it's going to hold or break, but what we can do is give ourselves a little bit of a safeguard. If price reaches the area, in this case, Fibonacci support, and all of your triggers remain above the area of support, we let the trigger lines determine whether it's likely to hold or break. Price reaches it because that's the catalyst for decisions. If the trigger lines remain above the area of support, this is an area that may reverse the market, that may stop the market, that may create an untradeable bounce. Next-gen users say to themselves, I don't have a clear path. Rule number 2 is not met because price reached an area and none of the triggers were capable of breaking. And this is a textbook termination condition. And look at the bounce that happened off of that big red line. The price bars came up and reached it, and we didn't know whether it was going to hold or break, but that was a big enough bounce to absolutely spoil any potential long trades. And that's really the recipe for it. Price comes down and reaches the area, the triggers don't break, and sure enough, guys, that termination condition started the reversal. There's that divergence low, the market heads back up. Fibonacci resistance, none of the triggers break. The market heads down. Notice that odds favorable momentum coming off of that termination condition. Guys, that's what is breaking these areas. And this is about the perfect picture. The sellers are in control and they reach Fibonacci support because absolutely none of the triggers break. Not one of my users came through and took that short trade. They said, absolutely not, it may stop the market. The buyers took over and they pushed. And odds favorable momentum, broken area, it broke an area, and then they get up to this area. Notice the weakening of the triggers, those anything can happen triggers. That precedes the reversal. The market reverses off the key area, the odds favorable momentum, and it goes right down to that divergence low. That divergence low that had been there for over 2 hours, and you guys knew absolutely no more short trades. Guys, this is textbook. Fib to divergence low. And this is nothing but termination conditions. Rule number 2 not met. But the cool thing is when you get a reversal off one of these key areas, when it changes the direction of the market, you'll be able to grab these little tails in between and capitalize. The easiest trades come after a termination that creates a full reversal. So when you learn to recognize termination conditions, you can say, I'm either going to let it break or I'm going to let it hold, but I don't have the advantage of a clear path yet. And when do you get the clear path? It's pretty easy. when your small triggers and your large triggers clear the problem area. So in this case above us, price reached Fibonacci support, and we didn't have any idea what was going to happen. We didn't know if it was going to hold or break. So the brand new user says, you know what? I need the advantage of a clear path. That gives me the best chance of success, and I'm really doing this to make money. So I'm going to let the small triggers, both lines, and the large triggers, both lines, get below support. When both sets of trigger lines get below support, you can see that it begins to behave as resistance. It'll actually change colors on your screen. With that odds favorable momentum and that clear path, because price didn't reach Fibonacci support yet, guys, there's one of the tails. This is where you guys are pinpointing that likely to continue spot. A lot of you are going to get in right here at Fibonacci resistance. You're going to take this high probability trend trade with a clear path and momentum, and you're going to ride that wave all the way down to Fibonacci support, which is a great place to take profits. And once you learn this simple recipe, guys, you never have to get caught trading into an area again. Price comes down, triggers start to break through an area, not a good termination because the triggers got through, and then it creates that pivot with a loss of momentum, that divergence low, that cyan line prints. Not a termination condition because price must reach an area, decisions must be made. What happens is price creates this, the loss of momentum creates this, and you can see that it gives it a good shove. And when it comes back to that divergence low, price reaches the area. You guys ask yourself, where are my trigger lines? They all remain above the trigger lines. This is a termination condition on this side. Price creates the line. That line in the sand gets reached. The triggers remain above. Now I have a termination, and this termination creates a reversal in the market. This is what we call a strong bottom. It's a pivot stop out of a prior divergence line, but when a termination creates a full reversal, it's a strong bottom. It's a good bottom. And a good bottom or a strong bottom is the precursor for the absolute highest probability trend trade that you can take. Those pivot stop outs become even more powerful when they coincide with Fibonacci resistance. And guys, this is the first picture reminding you that it's okay to sit on your hands and do nothing, that it's cool to not be in a trade without advantages. The buyers are in control, they're cranking to the upside, life is good, and they're as happy as they could be on their move to the upside. But then they reach that red line, that Fibonacci resistance, and not one of the triggers is capable of breaking through. They all remain below. Next-gen users say, hey, you know what? I'm not going long into this line. This is an area that may stop the market, that may create a bounce, that might create a full reversal. I don't know. It's not my job to know. I just like to be protected. Resistance pushes all the way down to Fibonacci support, all the way down to a mid band. You see it? And if you guys just ask yourself, where are my trigger lines? Well, geez Louise, they're all way above here. No short trades. And this is where the frustration kicks in. This is where people go, man, I can't go long and I can't go short, and this is crap. And this is only the new users that we're talking about, right? Because when you learn to read your indicators, you may find opportunities. But right now, there's just nothing to do. And you didn't go short with strong triggers. You didn't go short into support, and thank goodness, because it pushes all the way back up to resistance. And when it gets there, resistance, divergence, high, another resistance, three terminations. The trigger lines remain below on all of them, right? This is a termination. This is a pivot stop out of a divergence high. This is the one. Look at that. The push off of it gives you odds favorable momentum. The push off of it gives you a clear path. How come? Because this bar had not reached Fibonacci support yet. The path is clear. All the triggers are below resistance. The momentum is great. And guys, each and every one of you is going to understand how to catch the top of that tail, how to enter the market where it's most likely to continue. This high probability trend trade that happens after a termination, what we're going to call a strong top, this is the one that typically wins 70 to 80% of the time. And if you can learn to do nothing when there's nothing to do, you can take advantage when those advantages come together. And guys, this is where the money is made for the new users. This is where you learn to read charts. And there's one more that I want to show. Is everybody comfortable, especially if you're brand new? Give me a Y in the room. If price reaches an area, divergence low, or I'm sorry, yellow one-to-ones, and the trigger lines remain above, it means do nothing. It means you've reached an area that may stop the market, that may create a fight, that may reverse it. This is your safeguard, guys. This is a giant red flag saying, hey, just be cool for a second. Let's see what happens. In this case, look at it. The buyers push and the sellers fight, and the buyers push and the sellers fight. The triggers don't match. All the triggers are below resistance. They're all above the one-to-ones. There's all this indecision for a good 30 minutes where the buyers and sellers fight. Ultimately, small and large get above that area of resistance. The path is clear to the upside. We have the momentum that we need, and there's that tail. There's you guys pinpointing where the market is likely to continue. That is your highest probability trend trade, guys. That's the 10% when you sit on your hands on the 90. Is everybody good with the lesson? I know we hate to answer in class. What if I answer wrong? Everybody's going to laugh. Oh no. Thank you, Andy. Andy, I'll see you in the winner's circle. Here's the recipe, guys. No triggers through, no clear path. Sit on your hands, do absolutely nothing. That is your safest bet as a brand new user. Small and large get to the other side of the area. The area changes colors on you. We don't worry about the colors. We worry about the trigger location, though. Small triggers, large triggers above resistance. It behaves as support. Odds favorable momentum. There's another one of those tails. Egads and little fishes. It can be that easy. And then here's your medium probability scenario, guys. I told you that we talk about it, right? When an area has the potential to break, when most of your indicators agree, but a small problem exists. That is when the small triggers absolutely positively smash through an area of resistance or support. The large triggers haven't made it through yet. The large triggers are lagging behind, but you have that best of the best momentum, that odds favorable momentum. This fib has the potential to break. Potential is not broken though, so the path isn't clear. And if the path isn't clear, we go back to rules, back to advantages. I've lost one of my 3 advantages, which means that this is no longer a high probability trend trade. This isn't a trade that typically wins 70 to 80% of the time, but this is a trade where I can get paid if the conditions are right. If I maintain all of my momentum and I have the best of the best entry area, I can find a way to use this tail to take advantage of an area with the potential to break. But just because of odds favorable momentum, they don't always break. It's not a clear path. So it puts the thinking cap on that says, hey, medium probability trade, I've got to manage it aggressively. I've got to take quick profits. I got to make sure that I don't leave myself exposed, and I want to minimize my risk. And I'm going to give you a plan to take the easy ones with the clear path, and I'm going to give you a plan to take those 50-50s in the most advantageous way. Is anyone other than Andy good with what we're doing here? Price reaches the area, no triggers break. Guys, you have a termination condition. Don't trade into it. Same thing at lows. Price reaches the lows. Triggers don't break. Don't trade into it. Such a safeguard. The most broken rule by new users, by the way, trading into areas that may stop the market. And if we go back to the live market, look at the bounce off of resistance, but it ultimately breaks. Reach resistance, they didn't even react, but then the small and the large get above it. Resistance is beginning to behave as support. My triggers are a little bit outside. There's one of those little tails with a clear path. Pretty good. You're still doing it? Man, Sergio, can I have a moment of honesty with you guys? And I hope that you're okay with it. So when I started trading, I traded into every termination condition that I could possibly find. And I don't know why. I think I was just afraid of missing out on the moves. But the one thing that I didn't do, and this is one of the reasons why I'm so passionate when I teach this class, is I didn't know. I didn't know that I was doing. I didn't realize that I was making such a big mistake until I started posting in the room. And my brother, who taught the room at the time, he asked me, I still remember it like it was yesterday. He said, Mark, how many times are you going to trade into a termination condition and hope that it breaks? And then I got to the point to where every trade, Sergio, I took a picture and identified it as a termination condition before I ever thought about pulling the trigger. And for me, it fixed it. It fixed it 100%. You think you know the edge, but the problem is you don't, right? You know where the potential is. You know where the potential for an edge is for sure. And the cool thing is that if this is really going to be an edge, Look at that at 4:35 a.m. Let me scroll back. You can even use the refinement chart when you reach a termination. If it's really going to be the edge, everything's going to roll, everything's going to change colors. And that's one of the beauties of what we do, guys, is we don't have to guess and we don't have to hope or wish or want. We can just use a 100% proven, testable, and just work on our patience. And patience is the hardest thing. So, congratulations, Sergio. You, my friend, are human. And I'm telling you, rule number 2 is the hardest thing because it means that you can't be in a trade. It means that your clear path is gone. It means that you have to wait a second. But if you do, you're usually pretty stoked that you did. I'm going to give you guys one more termination, guys. And this one's not a large chart termination. This one doesn't use lines on a large chart. This one's going to use those divergences on a small chart, that loss of momentum that comes from a pivot. Um, because sometimes the large chart, it's so slow you're not going to see that change. So sometimes it has a clear path, but it just goes up. And sometimes it even has odds favorable momentum in the clear path, and it just goes down. This final termination condition happening on that smaller, faster refinement chart, this will help you see that change. And it's 3 divergences in the same price range. When I get that cyan line 3 times from a low, or I get that magenta line 3 times from a high, guys, this is a potential termination condition. This can push the market higher than your great entry. This could actually just be confirming maybe a little bit of overrun on a large chart. But when I see these 3 cyan lines from a low or a high, this is my big red flag. Hey, no more short trades, no more long trades. I can also use it for management. If I'm in the perfect short trade and 3 divergences print, it gives me a management opportunity to get out of that trade to avoid some trouble. This 3 divergences becomes even more powerful when my small triggers work their way inside of the large triggers. When I get those anything can happen triggers and 3 visual losses of divergences, guys, I'm not taking that next short trade as a new user. It's just not advantageous. That clear path is completely gone. And it becomes more powerful still. You guys that grew up on patterns, if the third pivot is higher than the previous from a low or lower than the previous from a high, it's a head and shoulders pattern, guys, and it just creates a little more trouble for you. So 3 divergences may stop it. 3 divergences with weak triggers intensifies it, and then that little head and shoulders, that makes it even worse. So 3 from a low, 3 from a high is going to help me see on the large chart when things might be changing. It's also going to create that management opportunity for me. And guys, that is termination conditions. We're done using the large chart. The large chart gave us momentum, right? The large crowd said that the market's going up. That's what they wanted. The large crowd said, not only is it going up, I'm going to give you such a gap between your small and large that each and every one of you is going to understand that the odds are favorable for the market to continue in the direction of the trend. And the large chart lets me know there's nothing in the way. There's none of those areas where I'm going to make a decision. So next gen users, let's look for an entry. Let's look for the best of the best. Let's let the small crowd shove against everything that we've done. And you guys pinpoint where that tail is likely to form. And you're going to do that with rule number 3. Rule number 3 says that you're going to use a limit order. You're going to be able to pinpoint so accurately that you're going to know where the market is likely to continue. You're literally going to wait for the market to come back to you. And you're going to use that limit order in an area. Fibs, midbands, yellow one-to-ones. So the way we use the large chart to define problems, we're going to use areas on the small chart to create a bounce point. And we're going to trade from those areas, but there's a little caveat there. We want them to be inside of what we call favorable large triggers. And favorable large triggers means that the large triggers, those dashed lines, the same ones that have to clear an area for it to be broken, and your synthetic triggers on the small chart, which are just large triggers from the large chart. You want them one on top of the other. You want them really focused, like 2 snakes riding piggyback, because the tighter that they are on one another, the smaller your window of opportunity is, the less room there is for these lines to be inside of them. And guys, high probability trend trade come from lines. They don't come from triggers. They come from fibs, mid bands, and yellow one-to-ones inside of favorable large triggers. So when these are really tight on top of one another, you're going to have the least amount of risk going in the trade. So for the new user, that's really the best of the best. That's your best look. As you grow with the software, as you learn to recognize things, you may find yourself where the triggers don't line up. And I took this picture this morning, guys. This is straight from crude oil this morning, where I didn't have favorable large triggers. They weren't one on top of the other, they were gapping. And I don't know, is the market going to bounce from up here? Is it going to bounce from down here? I can't gauge it. So my risk is astronomical. Um, and it's just not worth it to risk $700, $800 on a trade because the triggers are split. So we're going to use a limit order to buy or sell a pullback inside of favorable large triggers, guys. That's the recipe for a trade. So in this example, we're going to go through it. The large chart, the most current bar says that we're going down. And this is how I read my charts every day. I'm like, what color is it? Red. Okay, I'm looking for strong triggers. Smalls are below the large are wide, they're angled in the direction of the trend. Rule number one has been met. I have the advantage of momentum. And I'm making sure that both small and large are below those areas of support, those problem areas, and they are. So now I have a clear path as well because I haven't reached the next level of support. Please give me a why in the room if you're with me, especially if you're brand new, because we're going through the process of getting you guys into the market, and I want to make sure you understand this. Large chart leads the way. Large chart says the rules are met. Large chart is why we're looking for an entry. So the first step on the small chart, everything is down. Smalls, large, synthetic, areas, everything says down. Guys, we're going to wait for the small crowd to do their thing. We're going to let those guys fight the large crowd, and it begins with a reversal bar. This green bar in a sea of red. Scott, it depends not on how far from the area I am, but rather where my entry is going to be. Let me go through the entry sequence, and then we'll map it out real quick, and I'll give you an idea where my head's at each and every time I take a trade. Cool? Great question. Um, so I wait for the reversal bar, guys, and at the time of the reversal bar, all I'm doing is I'm looking. I'm like, okay, let's see if we can create a window of opportunity. So I look to my triggers. And I'm going to draw a box, whether it's just mentally or whether it is with a drawing tool. I love using a drawing tool. I'm going to draw a box from the top line of my triggers to the bottom line of my triggers. And why am I doing this? Because this is where I'm going to look for those areas. Does that make sense, everybody? This isn't where the market is where it's most likely to continue, because I need that bounce point. This is where I'm going to look for my areas. So inside of that big range, I'm going to look for my lowest point of resistance to my highest point of resistance. Remember, the large chart said down. The momentum is there. The path is clear. Resistance can be red Fibonacci, magenta midbands, or yellow one-to-ones. Your window is from the closest resistance to price, from the furthest resistance from price, inside of favorable large triggers. The lowest point of resistance to the highest point of resistance. Guys, this is your window of opportunity. This is where the market is most likely to bounce. And once you identify that, you're going to activate a limit order. You're going to right click on your chart. You're going to put it a tick or two below that lowest point of resistance. In this case, there's a fib that you can't see. And pray. Grab your rosary beads, rub them, whatever you need to do. Light some incense, do a dance. But at this point, your job is done. You've done everything that you can do. You've identified momentum and a clear path. You've recognized the window of opportunity. You've left a limit order at the bottom of it. And now you're just hoping that small crowd can do their thing. And you guys notice how it's still just the reversal bar? You'll get to the point to where you do this in a matter of seconds. And if they push it back to resistance inside of favorable large triggers, you're in a short. You're in a short with odds favorable momentum. You're in a short with no termination conditions. You're in a short with an area for entry inside of favorable large triggers. And guys, this is your highest probability trade. Focusing on the entry is your best chance of success. And we're going to do it again right here. And I'm going to draw through the process, go in the other direction just so you can see it. This is a pattern that repeats itself every day, guys. And when the large chart said up, and the large chart said odds favorable, and the large chart said clear path, you wait for the reversal bar on the small chart. When you get it, you look from your highest point of the trigger lines to the lowest point of the trigger lines. And this is where you're going to look for those areas because the lines on your small chart behave as a brick wall, like you're throwing a tennis ball against it. These are the areas for a bounce. Your window of opportunity extends from the highest point of support to the lowest point of support inside of favorable large triggers. You guys are activating a limit order at the top of that window. This is where you're going to get into the market. This is where the market is most likely to continue. This is the entry that I want you guys to never miss, to focus on for 20 days, because this entry creates a very manageable trade. What it does is when the market comes and hits it, you know that you have every advantage, but you have to be prepared. It may go to the bottom of the window. We've created a window. You still have every advantage. Stay in that trade. Hold fast. Everything is going your way. And understanding where the market should continue lets you know where the market shouldn't go. And this is where you're going to place your protective stop, just outside of that window, 4 or 5 ticks. Give it a little room. We're good, but sometimes there's wiggle room. If the market comes beyond the window of opportunity, if it pushes beyond those yellow 1-to-1s inside of favorable large triggers, guys, brace yourself. You will take a loss. You will lose money. There will be less money in your account than when you started. But the reason that we go through this every day, the reason I talk about this every day so much, is that if you follow the rules that were just presented before you, this is a trade that typically wins 70 to 80% of the time, which means mathematically it has to lose 20 to 30% of the time, guys. And this is a cost of doing business. This is a normal part of a positive equity curve. And the cool thing is you guys just managed your risk before you ever manage your reward. I want you to get okay with taking the occasional loser. You'll lose 2 to 3 of every 10. You'll lose 20 to 30 of every 100. But because you can manage your losses, guys, this is a trade, this is a plan, this is a methodology that wins more than it loses, that offers you success as the brand new user. And this entry is an entry that you should never miss because 70 to 80% of the time, it's going to run off to that profit target. And guys, this is your high probability trend trade. We talked about those tails, right? We talked about the tails on the large chart, going back, circling them. We don't trade the tails. We're never trading the tails because if you try to trade the tails, the market's all the way up here by the time you get in. I have one that's almost the same picture. What we're doing is you can scroll back, guys, historically. And I think I did it on crude oil this morning. But you can scroll back historically. And guys, do you see we're at the tail of momentum at 8:06 a.m.? I missed this one. I was a little bummed about that. Odds favorable. There's those tails. If I circle them, do you see how it pulled back directly to resistance inside of favorable large triggers? And if you missed that one, it pulled directly back to resistance inside of favorable large triggers here as well. The large chart led the way. The small chart refined that one bar and gets you into the market where it's most likely to continue. And if I use a circle on the tail, it lets me know that the rules were met. And if I put a box around the bar, look at how many bars were inside of there, guys. Let's go through the bar by bar on it. And I'm going to take away the cheater circle. And this is for my new users. Whoops. I'm going to adjust things. I adjust my charts a lot for the ease of education, guys. Crude oil says down. Does everybody see that? Crude oil is red under the most current bar. Crude oil has odds favorable momentum. And we haven't reached a key area. Is everybody okay with that? The rules are met on the large chart. So we turn our attention to the small chart. and we're looking for favorable large triggers. We're looking for large down, synthetic down, and we're just saying, well, there's a mid band and there's some one-to-ones and there's resistance. Right here, Don Sanchez, are you asking about this one? I hope you are. So Don Sanchez, large chart defines areas. Large chart defines trouble, doesn't it? What's the small chart? Small chart's an entry chart. It's a refinement chart. If there's not a big ugly line on the large chart, we're cool. What is this? This is one little loss of momentum on a small chart. Do you remember what the only termination condition I'm respecting on a small chart is, Don? Let me find the picture. The only termination condition that I will respect on a small chart is this one right here. Get up there. Three divergences. And we're talking about entries, Don. So I got rid of it so that we could focus on the sequence for the entries. That's why I get rid of it, because someone always asks. So we're going to use this chart as presented. Is that okay? And I know that that means sometimes you guys have to use your imagination if you saw a line on there, but it doesn't change the entry sequence. It doesn't change what you have to do to define the window of opportunity. And Don, you're absolutely right. It would have been a 50-50 scenario because the small triggers were through and the large triggers were not. Good eye, Don. But as presented, does everybody see? Odds favorable, no terms, right? Everything says giddy up to the downside. We look to the small chart, triggers, one-to-ones, mid-band. There's resistance down here. This one's on the wrong side of things. It's out of the equation. I'm going to wait for the small crowd to do their thing, guys. I'm going to wait for a reversal bar, and there it is. And at the time of the reversal bar, my job is to start looking from the top of my trigger lines to the bottom of my trigger lines. This is my first step. This lets me know where I'm looking for areas, guys. The second step is to go from the lowest point of resistance, which happens to be Fibonacci resistance, to the highest point of resistance, which happens to be these yellow one-to-ones. We've refined it down. You have an $80 range, an 8-tick range on crude oil. My job as a Nexgen user, as somebody that's following a plan that's been proven to win more than it loses, is to drop a limit order, a tick or two below that lowest point of resistance. Guys, give me a Y in the room if you're with me so far. Large chart said down, large chart said clear path. Small chart said here's your reversal bar. Let's define the window of opportunity. We've got it. Limit orders there, guys. Hands off the mouse. There's nothing else to do. And if the market pulls up and hits that area of resistance inside of favorable large triggers, guys, I'm in a short trade with every advantage that I could ever hope for. And the cool thing is if I know where the market should continue, I know where it shouldn't continue. And I've got about 11 or 12 ticks of risk on this trade. And it goes up another bar, and I get nervous. The trade's against me. I've got negative equity. Should I jump ship, or do I look left and remember that the momentum is the best, that the path is clear? And then I get a reversal bar, and I want you to see, and this is one of the great things about Nexgen, is I'm going to reduce my risk above that reversal bar. So I went from $110 worth of risk down to approximately $50 of risk. I have the advantage of momentum, the advantage of a clear path, and I also have just gotten into the market where the market is most likely to continue. Guys, the best thing you can do is take this picture. Take this picture, write your rules on the chart, define momentum, define the clear path, define the entry inside of favorable large triggers, use those words, and then drop it in the room. And when you drop it in the room, we'll have a talk about it. We'll talk about whether or not it fit the rules, whether or not it fit the plan. And then Don Sanchez made the awesome observation, but Mark, there was a divergence line right in the middle of that trade, which means that with the small triggers through with odds favorable momentum and the large triggers still above it, This is actually not a high probability trend trade. The point of entry is exactly the same. Don, that's why I took that off, because we were focusing on this. But the reality is, guys, the 7150 has the potential to break, but it didn't. And why am I okay taking this trade? Because while this is a termination condition, it's not coming from one of those key Fibonacci areas, which means that it's not the best of the best. And very often, they like to keep pushing. You do not need divergence. Did that make sense, Don? Awesome. You do not need divergence. All this divergence is, AE, is it's a little loss of momentum that pushes you back. It's only one loss of momentum. And on a small chart, um, one divergence isn't a big deal. It just kind of pushes you back. But on a small chart, three divergences, one, two, three, that can end a party. Well, that's what it did over here, right? When this divergence printed, Don, it went right to the midband, didn't it? The first loss of momentum got you to resistance. The second loss of momentum got you to a midband. And then I want you to see what happens after the midband. The large triggers never get above the areas. Do you see it? And let's see what your small chart looked like. There was your first push. One loss of momentum, and the sellers weren't done. Well, there's that pivot stop out. The buyers stole momentum again, and they pushed it up. And they were waiting for them right at resistance, right at a midband. All the triggers remain below. That's the suicide long. That's not a good looking long because the path isn't clear to the upside. You've lost momentum. And then they want to continue back down. And you'll notice everything rolls, everything changes. Eventually, it gives you momentum. Some people take this first shot. This one is a little more conservative. And then that one's the best of the best. So you actually get three different trades here. You get the chart reader's trade for continuation. You get the medium probability at a divergence low for continuation. And then you get a high probability, odds favorable, clear path, only two divergences, right back to resistance inside of favorable large triggers. Do you see the difference? That's actually three trades, three potential entries. New user, a little more experienced user. I've been reading indicators for the last 60 days. Three opportunities, one of them is high probability. I hope that made sense for you guys. And then there it is again, Don. Not coming from an area, loss of momentum, straight to that midband, right? Large trigger stayed a full bar away. Nobody went long because it wasn't a good bottom, because the path wasn't clear. Hopefully you didn't take that one. That's a medium probability scenario, and your window of opportunity was that big. Huge, egads. That's not a good one. So you go through. It might, Andy. It took me more than 60 days. I'm a daydreamer, guys. I was an English lit major, and I'm not a rules follower. I never have been. The better you are at following rules, that's why pilots do so well so fast, because they're used to checklists. Everybody has their own pace. Everybody has their own time frame, and there isn't one that is right or wrong. But if you keep it simple, learn the direction and add to that momentum. And if you get these two lessons, awesome. Start studying terminations. Ask a million questions. Once you can identify whether or not your path is clear, start looking for entries, right? Keep it sequential. Let it be easy. And then let's talk about, who asked me about distance? That was Scott, right? So Scott, let's talk about it, bud. And you know what? I think I had an even better picture that I liked. Let's use this one. All right, guys. So when is it too close? And that's it, Cav. And there's a reason that pilots are on simulator first, right? So that they can make mistakes. And then they can have an instructor come in and say, hey, Bob, you went full flaps and Not so good. Hey, good morning, Mike. All money, right? Scott, are you with me? And guys, let's talk about rule number 3 and how it gives us room to get to where we're going. So the top of this bar, Scott, is 2 ticks from the divergence high, and we're about 4 ticks from one-to-ones in resistance, right? That's not enough room to make money, is what most people are thinking. And you'd be exactly right. If you got in at the top of that bar, it's ridiculous. You have the potential to run into an absolute wall of just yuck. But because of rule number 3, that's it. Guys, listen to Mike. He's been with Nexgen for 10 years. Keep it simple. Focus on the trend trade. Don't fight, no stress. Amen, Mike. Scott, you remember that our entries are on pullbacks, right? So that 4 ticks, that 5 ticks, if you're trading from the area inside of favorable large triggers, it grows exponentially. It absolutely grows exponentially. So I'm not gauging how far I have to the next area from the top of the bar, but rather from the point where the market is most likely to continue. Um, that's the first part of the equation. Does that make sense, everybody? Your 2 or 3 ticks turns into 20 to 30, and that's more than enough room. There's another thing that I want to talk about, though, and I like doing this, and this is just a little how-to for you nuts and bolts people. So Fibonacci areas, Scott, they come to be upon thousands of calculations, thousands of calculations. It is every move on the chart, every up, every down, every this, every that, every these, every those. And your software measures every one of them and creates these Fibonacci numbers for each and every one of them. And then the algorithm comes in and the algorithm weighs them and sorts them and creates what you have is these lines, whether it is support or resistance. No, I teach them to enter on the small chart, Mike. I teach them to let the large chart tell them when it's time to take a trade, and the small chart shows you where the trade should be coming from. But when we talk about all of these calculations, Scott, these are, it may be 183 areas that create that one blue line. It may be 183, calculations that create this one blue line, this one red line. So if I'm a tick below it or a tick above it, if I'm that close to it, to a fib, for me that's usually good enough. Anything above 3 ticks, I'm still taking the trade. If it's 1 or 2, I remember that my fibs were developed from thousands and thousands of calculations. In a tick or two, I'm pretty cool not taking it into there unless the conditions are perfect. The flip side of that, and the other side of it, is this divergence high line is an exact calculation. This divergence high line is the exact point in history where the sellers stole money from the buyers. It's the 100% exact spot. So there are no over-unders on it. I want price to hit it to the tick. And then I'm pretty cool with it. Then I say, okay, I've reached that termination. These yellow ones, one-to-ones are the same. It's one calculation. It's an exact number. So if price reaches one of these, I'm good. If it doesn't, I'm clear. But the fibs, I give a little more wiggle room. Does that make sense without confusing anybody, I hope? Fibs are areas. Awesome. So if I'm a tick or two below, I'm pretty cool. But if I hit a divergence or a one-to-one, that's party over for me. Never bet against one-to-ones. Amen. And you'll find that these one-to-ones, guys, they catch overrun on the large chart. A lot of times, if they do get beyond that fib area, those one-to-ones almost act as a goalie. And you'll see it a lot where they'll come through and it's almost like a backstop. Um, that divergence pushes us to the mid band. From the mid band, it pushes right back to support those large triggers. They steal momentum again. Guys, doesn't this look exactly like what happened back here? Haven't we seen this one before? It doesn't guarantee that the market's not going to go up, but at least keeps us on our guard a little bit. Let's wait for those advantages to be present. Whew, we made it through the first hour. Let me give you guys some gifts, especially my new users. Guys, I'm going to give you a high probability trend trade checklist. I'm going to give you a checklist that is designed for the new user to make you a chart reader, that is designed to optimize your chances of success, that's designed to get you into the market at the correct spot. And it reminds you, print this out and put it on your desktop. It reminds you that when a termination creates a full reversal, that's the best of the best, because the powers that be got to that key area and it completely reversed the market and gave you your rules met. Guys, this is a game changer when the market comes from a good top or bottom. There's a video on it too if you want to watch it. You can take a trade without a good top or bottom. You can still take an amazing trade without a good top or bottom. Just use those three divergences. Manage it out if you need to. This makes you check for odds favorable momentum on both charts, no terminations in an area inside of favorable large triggers. As I've never had anybody in the history of this checklist, true story, I've never had anybody in the history of this checklist do less than 70%. I don't know how you are with math, but if you're winning 70% of the time or better, it's difficult to not make money, unless your management plan needs a world of help. So this is creating confidence through the memory of success. Guys, this kind of gets you set up for the game. This gets you feeling good about it. You can recognize advantages, and it opens the door for more trades. I'm going to give you the same checklist with the same rules, the same everything, but visually, what is a termination that creates a full reversal? What is odds favorable momentum? And almost more importantly, what's it look like when I lose that advantage? And what does it mean to me? It means anything can happen up or down. What is a termination? What is a clear path? And then as you grow a little bit, when does that thing have the potential to break? It's all here. And then defining the window of opportunity on that smaller, faster chart, whether it is long or short, guys. This checklist should be studied for a couple minutes each morning before you start trading. Make sure you know what you're looking at. Make sure that you've been taking pictures of what you're looking for, right? Filling up that spreadsheet over and over, recognition through repetition. And then finally, guys, I'm going to give you the KISS plan, the Keep It Simple plan. And this is a stepping stone in your journey. I'll tell you right now, you will not only take high probability trend trades. I've never met anybody that only takes high probability trend trades. Can you build a solid trading career off of them? Absolutely. Are there more opportunities? Absolutely, guys. This is a stepping stone in your learning journey. It's designed to optimize your chances with the high probability trend trade and that 50-50 trade, that medium probability trade where the area has the potential to break. There's more than one way to take these trades, but this is the best way to take these trades. This is the one that keeps you on the right side of things. This is the one that keeps you from fighting. This is the one that keeps you focused on the three advantages. Through simulation, study, class feedback, continuous practice, you're going to create your own plan, guys. You're going to see patterns that maybe even I don't see. You're going to recognize trade setups that you've created through your chart reading. That's awesome. That's what I want. But until you can read your indicators, it's okay to have a solid plan that's been proven that gives you a better chance of winning than losing. And I'm going to tell you right now, I've had people get funded in those prop firms using the KISS plan within their first 30 days with Nexgen. It can be done if you allow it to be simple. And the simple plan starts with don't fight the large chart direction or triggers. For the brand new user, don't fight either. And I'm not going to lie to you, you're going to find a time when it's appropriate. You're going to find a time through your chart reading, maybe a year or two in, where maybe you do go against that large chart direction. Maybe you do go against those triggers, but you're going to have chart reading reasons to do it. In the beginning, just don't even waste your effort on it. This will eliminate about 60% of the mistakes that new users typically make. Define your entry. 20 days, guys, getting into the market at the right spot. 20 days of being able to recognize the area inside of favorable large triggers because it's going to allow you to manage your trades. Great entries create manageable trades. And then the second bite of the elephant is you got to manage it, right? Once you get in at that great spot, what are you going to do with it? Are you just going to stay in it forever? Are you going to get out of it? Are you going to manage it? You're going to create a plan tailored to your personal goals based on your experience reading the indicators. There's that old line again, right? Your chart reading is going to create your management plan. Your pictures are going to create your management plan. Your feedback in this classroom is going to help you develop a management plan. Until you have that, of course, I'm going to give you one. And what we find is that the most mechanical, pragmatic, methodical, opinionless management plan for new users is the most advantageous management plan for users. Because in the beginning, it's scary. There's fear, there's adrenaline, there's hopes, there's wishes, there's wants, there's all these things that can affect the outcome or your good decision making. So everything begins with, let me bring this up. Everything begins with, and this is so important, guys, everything begins with the large chart leading the way. Everything begins with a large chart telling you that the market is going down, telling you that the momentum is the best, telling you that the path is clear. And then from there, this management plan revolves around your ability to get in where the market is most likely to continue, the most advantageous spot, that line inside of favorable large triggers. When you take this entry, your initial stop goes where the market shouldn't. It goes outside of that window of opportunity. And at this point, there's absolutely nothing for you to do. There's no reason to move a stop. There's no reason to move a target. There's no reason to do anything other than roll 6 feet back from your mouse and wait and see what the market's going to do. One of two things are going to happen, guys. It's either going to hit your stop, you're going to take a small loss, you're going to be cool with it because it's a normal part of a positive equity curve, or it's going to give you a reversal bar in the direction of the trade. And this is where the if-then comes into play. If the market gives you a reversal bar in the direction of the trade, then you will move your stop 2 ticks above it. You will manage your risk before you ever manage profits, guys. Now at this point, there's nothing to do. You're either going to get stopped out once again, but your risk has just been cut in half, which means that your losers are smaller than your winners have the potential to be, or that market is going to go to your first target. And the first target is small for new users. It is small for people learning to read their charts. It's only $100. But with this much momentum, with this clear path, $100 is typically pretty easy to reach, guys. And everybody wants to get rich on day one. And that's just not how it works. $100. $100 creates confidence because now you're successful. Ninja Trader just told you that the profit target was hit. It depends on the market, Andy. If we're trading the S&P, $100 is 8 ticks off in the distance. If you're trading crude oil, it's 10 ticks. If you're trading the Nasdaq, it's 20 ticks. So it depends on the monetary value of each tick. Typically, if you're starting on crude oil in the S&P, it is 10 ticks for crude and 8 ticks for the S&P. So you've only got to go 8 ticks to get to your profit target, 8 ticks to success, 8 ticks to confidence, 8 ticks with all that momentum and a clear path. And you're going to move your stop to break even. So not only did you just get paid, but you have absolutely nothing to lose on this trade. There is absolutely no risk into this trade, which is going to let you learn to believe in the large chart, learn to believe in the advantage of momentum and a clear path. And at this point, guys, I'm going to tell you right now that break even isn't your best stop. Break even is not the best of the best. But when you have nothing to lose, it's easier to hold for the next target. And you're either going to get stopped out break even, which really doesn't hurt, or it's going to go to your second target with all that momentum. And guys, second target's only $200 in the distance. 8 ticks or 16 ticks on the S&P, 20 ticks on crude oil. And that's a $200 target, which means that with odds favorable momentum, with a clear path, with the perfect entry and very pragmatic management, you just made $300 in this trade and you're exiting and you don't care what happens next because you just got paid, guys. And if this is all that you can accomplish once a day, that's a $1,500 week, guys, and that's a $6,000 month, and that's a $72,000 year without the benefit of compounding or adding contracts or holding for larger moves later like you will. Guys, this is confidence through the memory of success. This is simplicity taking you to the next level. And the idea is that you allow it to be simple as the brand new user. You really focus on making sure that your entry is the best of the best. You really focus on making sure that you're getting paid, getting confident, building equity, building confidence. And when you're good at the high probability trend trade, when you're comfortable with the entry, when you recognize the advantages, congratulations, you're a chart reader. And being a chart reader takes you on to bigger and better things. The first one is going to be the 50-50 trade, that medium probability trade where there's an area with the potential to break. Because it's the area not broken, and I want to do this again because I always speak in terms of advantages. Because the area is not broken, it's not a clear path. If it's not a clear path, the first thing your brain should tell you is I have to manage this aggressively. This is not the best of the best. I need to make sure that I protect myself a little bit. I need to make sure that my risk is low. And if I'm not going to have a clear path, I'm going to 100% insist on the best momentum look that I could ever have. And I'm going to insist on a small area for entry. The same entry rules for the high probability trend trade. So the checklist for the 50-50 is a little different. Odds favorable momentum on the 13-2 is a must. Small triggers outside of the large on the 5-1. Odds favorable momentum is a must. Notice that it says no divergence on the 5-1. Does everybody remember what divergence represents? Divergence represents a loss of momentum. I am not going to sacrifice momentum in any shape or form, whether it's large chart or small chart, if the area is not broken. And you want it to come from a good top or bottom, from the best of the best, from a termination that creates a full reversal. And guys, if all of that is met, enter at the area the same way you did the high probability trend trade. It reminds you a second time, divergence is a killer for that 50-50 trade. And then you get into the management, right? The initial stop's outside of the window, just like the high probability. If you get a reversal bar, adjust it 2 ticks, just like the high probability. And then for the third time, it reminds you that if divergence prints, get out of the trade. You're losing that advantage. And then quick profits, these are base hits, guys. And this KISS plan has been used by multiple users to get funded, to go through, to be consistent. And typically they tell me they're winning between 75–80% if they're following what's going on this plan. And I also want you to see something for the sake of simplicity before we get into this first break. If I take everything that is fluff off of this chart, it's right at a half a sheet, guys. Big, bold font, underlines, right at half a sheet. 2 trades, building confidence. It doesn't have to be difficult. It does not have to be extensive. It doesn't have to have a million rules. All you have to do is stay focused on the best entries and manage accordingly. And you're going to do that with checklists. You're going to do that with feedback. You're going to be able to go through. And I would say within the first 30 days, you'll recognize this high probability trend trade. By the end of your demo, you're going to know that it works because you're going to go back and test it on those tails. You're going to ask a million questions. But we just learned the rules. You guys simulate, post in the room, make sure you have the correct rules. We simplified 2 trades. What looks you're going to commit to. You're capable of taking pictures, filling up your spreadsheet. And just so you guys know, on this spreadsheet, the management sequence is in the management section. The entry sequence is in the entry section. Here's my spreadsheet. I'm going to give it to you. And I probably have a lot of extra trades that aren't in the one that was provided to you by Nexgen, so steal mine. Every great trade creates a management opportunity. As you grow with the software, what you're going to find is straight here from the management side, when can you hold for bigger trades? Well, your chart reading is going to say, I've got odds favorable in a clear path. I'm going to hold that last contract for a bigger move. I'm going to turn these $300 trades into $500 trades. I'm going to turn these $500 trades into $700 trades. I'm still going to get paid because that's the goal, but I'm going to let that last one run, guys. And when you present in the room, and here's an example of it. When you present in the room and you show me the perfect trade, the odds favorable momentum, the clear path, the beautiful entry, and then you show me the exit right here at the divergence low, well, then we can say things like, hey, if you're trading a 2 lot, that's a great place for first contracts. But with all this momentum, it makes sense to hold for the second fib. And suddenly, $300 or $400 turns into $700 or $800, guys, and that's where the chart reading really takes you next level. So use the spreadsheet a lot. Post a lot of trades in the room. And remember, as we get into reading charts, tell me why you did what you did. The most important thing you can do, because we're going to work together to make sure that you can repeat it, to make sure that it is a repeatable pattern. Show me where you entered, whether you circle it, whether the enters and exits are on your small chart. Let me know where you got in, and we'll talk about it. Maybe there's a better entry, maybe you did it perfect, and then show me where you got out. Let me know if it was predetermined or if it was fear or if it was adrenaline or whatever, and we'll work together on management as too. And that's what we do in this room, guys, is everything is a discussion. Everything is us talking to get you to the next level. Everything is chart reading. No triggers through resistance, nothing to do. There's a second divergence. All the triggers are still below resistance. 1, 2, 3, 4 divergences in the same price range. Guys, you're witnessing an amazing fight in between areas on the NASDAQ, and it's a fight that none of you have to be a part of. Nobody has to get hurt on that one. And then over here on the S&P, you have odds favorable. You had a 50-50. 3 divergences pushed it beyond the areas, right? Maybe it's going to continue up with all that momentum, but you're going to wait for an opportunity. You're going to wait for the rules to be met. Eventually it'll happen, guys. It's like a bus. Are there any questions about the high probability trend trade, guys? Are there any questions about any of the 3 advantages? Did I miss any questions? I don't think so. Let it be simple, guys. Speak in terms of advantages every time you look at the chart, and just stay focused on the best of the best. You're all going to grow. You're all going to get to that next level, I promise. It happens. I've never seen anybody just stall out. Anyone that did the work, excuse me, let me say that. So this is the part where I'm going to take 5 minutes. I'm going to go stretch my legs real quick. When I come back, we're going to start looking at the charts that you guys presented. We're going to start talking about the advantages. Hey, good morning. So Adriana, on the S&P, you see the 3 divergences on the small chart. What does that mean? It means that it might push lower, right? That's a termination. And here's the cool thing, Adriana, and I love that your recognition. It did, didn't it? It kind of dropped a little tail below all the good stuff. And I want you guys to think about divergences on the small chart the exact same way that you'll think about divergences or areas on the large chart. And let me see if I can find an example. This divergence stinks, right? That's bad. It's in play. Let me draw a line. Once my small and large triggers get above that divergence line, rear view mirror, Adriana, I'm not worried about it anymore. So what you're going to find is that you may get these divergences happening. And if the small and the large triggers break them, the same way if the small and large triggers break an area on the large chart, we'll consider that area broken. So as the S&P comes up, when the large and small got above there, it would have been okay to look for an area. It would have been okay to look for an entry. Unfortunately, it went right to Fibonacci resistance. Not much space there to get it done. Does that make sense, everybody? 3 divergences aren't infinite. They may create a little push down, but that doesn't mean that you're not going to continue in the direction because the momentum in the large chart set up. We're just being a little calm and a little patient. And then let's talk about it as well. If you took this one and you were in at support inside of favorable large triggers, you were in at 49. And here's what's pretty cool is you made $300 before it ever came back. So Adriana, the other side is you can get paid when it's the best and just sit these out and you won't feel like you're being left out. And even if you took it on the second pullback and got in at 50.50, you still made $100 and went break even before that third divergence hit. So great entries create manageable trades without a doubt. And then sometimes we have to be just a little patient. I don't have any rules where the third divergence can serve as support because, Adriana, it's a small chart. There are so many fluctuations on a small chart that it's difficult. And let me show you. Let's kind of draw all of this on the small chart. It really happens in these a couple bars on the large chart. So there's so many ups and downs. There's so many potentials for divergence. So many all these different things that can happen here. And notice that it scrambles right around the key areas. That I'm not giving that much power to one of these little pink lines or one of those little cyan lines. I reserve that for Fibonacci. I reserve that for yellow one-to-ones. Does that make sense? Great question. I'm assuming you have a little bit of experience because one thing that you'll see sometimes is there's your divergence high and it broke and it's not in play anymore, but it did behave as a little bit of support, but we're not using it on the large chart. It just happened to coincide exactly with an area inside of favorable large triggers here. Is it a coincidence? Probably not. But isn't it easier just to get momentum in a clear path? In this one, let's keep it simple. Let's not add rules. Good stuff, and they are off to the races, aren't they? All right, guys, I'm going to take 5 minutes. Great questions. Crude oil has momentum. The large triggers are below. The small triggers are above, barely. And do you guys see the loss of momentum? If you're a KISS trader, that's not your trade. If you're a KISS trader, divergence says sit on your hands and wait. Let's see what happens at the area. I'll be back in just a minute, guys. Post them in the room if you got them. Ask all your great questions. When I come back, we'll get into that second half of class. class. Did everyone see how the small triggers barely eke their head through diversions prints? And I said before I left that if you're trading that simple plan, that KISS plan, that's not your trade. Pretty awesome, isn't it? Guys, your rules are designed to keep you safe. So Andy, do me a favor on your entry chart. Right click and go to data series. Once you go to data series, scroll all the way to the very bottom and there's going to be something that says plot executions. Come over here and change it to text and marker, and that'll show you where you got in, where you got out, and it'll show you historically too. So if you take care of that now, you'll be able to see it, what you've done for the day. Absolutely. No, he did not, D-Rock. So he came through. It is not 100% perfect. He actually called me last night at 7. He goes, "Hey, let's do this." And he put it on Chris's computer, and there was one little challenge with it. So he's like, "Nope, not going to do it. You got to teach class in the morning." He goes, "Let me get the challenge fixed, and then we'll do it." So he's excited and he's super close, but he refuses to put it out until it's 100% perfect. He's been running on his computer for 3 weeks, but there's some security stuff that has to be taken care of for us. Yeah. Cool. All right, guys, I'm going to scroll up to the top of the room and we're going to talk about what you guys have been doing. I want you to remember that your charts can be, um, the basis for somebody else to learn. So make sure that you're annotating them. Make sure that you're telling me why you're doing what you're doing. And guys, if you have a question about somebody else's chart, please raise your hand and ask a question. It's pretty good. So let's see what you did. Andy, you said that you bought this tail, which became a bouncy house. You bought in before it broke the midline, still made money, but only because of luck. So I guess it depends on where you got in, right? And there's that split triggers. And gosh, Andy, I want you to see this because this is kind of cool. So there is your picture. And I'm going to take it real quick. I'm going to take your picture. And I'm going to put it right next to the one that I took this morning, which happens to be, um, let me move it over, the exact same picture. And the one thing that I wrote is, where's it going to go? Is it going to go from the high point? Is it going to go from the low point, right? And that was the picture that I took this morning because when the triggers are split, when they're not favorable, you don't know if it's going to go from here or if it's going to go from there. Andy, did you notice that 3 divergences pushed it down where it closed the gap to those large triggers perfectly? And that's where it started continuing back up a little bit. Pretty awesome. So if you took the first shot, Andy, if you got in at 71.30, let's say, and you stayed in the position, whether it was the first one or the second one, that third divergence told you, let's cut ties, let's get out. It's probably going to push lower. And sure enough, it did. And if you got in at these one-to-ones, you had the opportunity to make money, get to break even. Um, no reason to hold it all the way back down here, all the way through the third divergence. Does that make sense? It's a great picture. It's a great read. You had odds favorable in a clear path. You just didn't have the best entry area, so it required a little bit of management. Nicely done, Andy. Let's see. Who's next? Ron C. A lesson on momentum in a clear path. Triggers were closing, but they were strong. Absolutely nothing in the way. Ron looks for an opportunity just to get in and out, make a little money. Base hit. Monday's a one contract day, Ron. You got out right at the third divergence. That's perfect, Andy. Then you couldn't have done that much better. That's chart reading, my friend. That's being able to take those simple concepts and turn them into management plans, turning them into entry plans. Um, Great trade, Ron. And guys, this is one of those things where it doesn't have to be odds favorable, clear path, pull back to the area inside of favorable large triggers. Ron never even attempted it here. He said, I'll let all the nonsense stop and I'm going to take a little chunk right out of the middle. And that's one of the ways that you can build a plan, guys. You begin to see things over and over, and it makes it easier for you to just have something that fits your needs. And let's see what's next. Cav. Let's see how you're doing here, Cav. And this is the same thing as Ron's, just the other way. Odds favorable, absolutely nothing in the way. Cav says, I can take a chunk. Major goal for the day on a 2-lot, 1 room. Is that right, Cav? You made your goal for the day with momentum and a clear path and just taking advantage of it with a quick hit. That's freaking rad. Andy, I'll tell you what, Cavs put the time in. I don't think there's anybody in this room today, maybe some older users. There's not a lot of people that have put more pictures for feedback in this room than Cav. There's a reason he's so good at chart reading. It's not me. It's because he annotates everything that he does. He talks about everything that he sees, and he relays it back to a manageable trade. Ron C. Everything's up, clear path, divergence lets you know it's probably going to the mid band, bingo bango, and then it bounces back. That's a long hold. Oh, you went short off the mid band from the correct. Man, Ron, you're showing off at this point. Nicely done. Ron, that's an awesome trade. All right, Cindy, let's see what you're doing. Everything says up. The momentum's amazing. You take the perfect entry and get paid. Cindy, how easy was that? It's not the clearest path we've ever seen, right? But with all that momentum and a virtually no risk entry, absolute rock star. I love it. Nice job. You know what's funny, guys, is they can all look like this. They can all be easy. The only thing that ever makes trading hard is us when we try to catch everything, when we try to get every move. It takes, and how long did it take you, Cindy? It takes a couple weeks, doesn't it? Getting that repetition in, hearing the same damn thing over and over, seeing the pictures, and then it clicks. And then it clicks, guys. It does it for everybody. It's like drinking from a fire hose in the first couple weeks. And then if you keep it simple, you keep it focused, it clicks. Cindy, great job. And then Dwight, same look, right? Dwight says, but you know what? I'm going to let it get a little further through the area. And you took the second perfect entry. You got 10 in and 10 out. Managed closely because the two prior. Was that your first trade, Dwight? So just for grins, and guys, that's a super fast hit right there. That was a $600 trade. That would be a $3,000 week. If that's all you did today, if you shut it down and you just recreated something that, but momentum leads the way, guys. Momentum says, hey, let's do this. Momentum says, here we go. Momentum says it's probably going to push up because it's hard to stop a freight train. And Dwight, you do a great job of understanding that. Your management plan is fast and efficient. I like the way you do it. Haji, good morning. So let's see what we have. Pivot from nowhere hits the mid band, continues down. Pivot from nowhere hits the mid band, continues down. Odds favorable, 50-50. You take the pullback into the triggers. First target's at 88. You make $100. Out break even. You're worried that you would have looked at odds favorable minimum and large and stayed in the trade, would have not gotten out at fib. Let me see. I love the word afraid when we talk about trades. So where you are in the trade, Haji, is it high probability or is it 50-50? What do you think? Can you see that? Large triggers aren't through, right? It's 50-50. So you take a great entry. You get paid. You go break even. Haji, I think it's beautiful. There's nothing to worry about. It was very pragmatic, wasn't it? And if you decided to hold, you would have hit your second target, but you didn't. You got out break even. That's totally cool. Two divergences on a 50-50. That's not the best look. I love the aggression. Awesome, Dwight. I'm such a big fan of getting paid. Call me crazy. 50-50 trade, two divergences, GTFO, man. Who cares what happens next? Great job, Haji. But I think this is a great example of when you know what you're up against, you can be a little more aggressive. You can feel good about it. And everybody's going to take that trade. Haji, everybody's going to take that trade where you exit because your rules are met and then it runs for like 17 days in the direction of your trade and you're like, ugh. And you're going to be tempted to change your rules. I think everything about that was about as solid as it could be. Nicely done. And then C-Dub. 50-50, got in early. You got in way early. And then you got stopped out. Great entries create manageable trades, don't they? Such a big thing. C-Dub, I think it's a good read. I think you have momentum. Everything's up. Everything's cool. Probably would have been better entries back here at 44. But I think just getting in at the mid band, you had tons of room back to the small. The stop is totally appropriate, C-Dub. Just didn't work. Happens sometimes, doesn't it? But it could have worked for a smaller loss at the area inside. That's about the only thing I can say. I like the look. I love the trade. I think you did everything the way you should have. And why is it going up? Well, they wanted to push it back to support, didn't they? So it bounced off of this fib and then continued up. Happens sometimes. Frustrating when that happens, but it does happen sometimes, guys. It's just a part of it. And I hate to say it, that's it, guys. That's all the pictures. So let's see what the live market's doing. Let's talk about it. You guys want to go through it the same way I read it every time? Every time I read a chart, look at the large chart. Guys, what way are we going? Are we going up or down? We're going to get some class participation in. Should I be looking for long trades or short trades? Up. It's long trades, right? It's up. Do I have odds favorable momentum? Are the smalls above the large wide, the angled in the direction of the trend? I like it. It's pretty good, right? That's a pretty good look. Giddy up, baby. So I go to rule number 2. Price reached 71.16. It reached Fibonacci resistance. Guys, how many of my triggers made it through that area? And I think this is the most outstanding part of what we do. None. What does that mean? That means that I've reached a termination. I have reached a decision-making spot. Maybe the buyers are going to take profits. Maybe the sellers are going to try to enter positions. But what I do know without question is that if price reaches this area and none of the triggers break, guys, that's not my long. Thank goodness. Rule number 2 for the win. And now it pushes all the way down to Fibonacci support and no triggers broke. Isn't that crazy? This looks just like the manual. Price comes up, hits resistance, creates divergence, pushes all the way back down to Fibonacci support. The triggers all remain above. I wonder if there's a pattern in here that says maybe they'll retest it and make a decision. But the cool thing is that some of you decided to catch that one and take it all the way up to resistance. So guys, this is what I do every time I see a chart. I open it up and I say, oh, it's green. I have odds favorable momentum. The path is clear. I only had 2 divergences on a pullback to support inside of favorable large triggers. That's my entry. Do you guys see it? This is the NASDAQ, which means that these strong small triggers can be problematic, but I've already got my risk in place, which means that my stop is right here. And then from 61, where is that at? 61 flat. I only have to make it to 66 to make $100. Does everybody give me a Y if you see it? The tail isn't formed yet, right? The bar isn't formed, the tail isn't there, but we can see the pullback to support inside of favorable large triggers. NASDAQ is a little different animal though. You're in that one? Gotta watch these small triggers. Gotta watch them on the NASDAQ because the NASDAQ uses a 13.2 chart, a large chart for its small chart and a larger chart for its large chart. I love the entry. The risk is established. You're at your trouble spot. If it breaks through here, you don't have a fib until 16,705. Just has to get to the other side of those darn triggers. Come on, NASDAQ. Guys, starting on the S&P, starting on crude oil is the easiest endeavor that you'll ever have. The NASDAQ is a little bit of a different animal on entries, which means that you have to have a little different approach on your entries. This yellow section of the NASDAQ really goes through my entry thoughts on it. I blew out 9 or 10 accounts trying to learn the NASDAQ rather than using simulator, rather than taking pictures. And then once I embraced the same path that I teach you guys and I started using this little study tool, I came up with all of these pictures to help me trade the NASDAQ. And they said that those small triggers may behave as resistance. So I hope you guys that are trading NASDAQ kept that in mind. And if you want to trade the NASDAQ, go through. Let me know if you have questions. But I'm telling you right now, that is the single most problematic thing that I've seen on the NASDAQ is these small triggers against a trade. All the NASDAQ GWC, the NASDAQ futures, the accumulation of every one of those stocks, just like the S&P. So these are NASDAQ futures, which means it's everything. When the NASDAQ goes up and down collectively, it's represented right here. And if you fought those triggers, you're still saying to yourself, this fib has every trigger and momentum above it, and maybe you change your stop placement a little bit. Maybe you're willing to take that rundown with a large chart. You know where the market shouldn't go based on termination condition rules. So some of you got stopped behind the reversal bar. Some of you said, well, I understand the NASDAQ. I have to trade this a little differently. I've got to be willing to stay in it a little bit longer. And we'll see what happens here. If you are trading the NASDAQ, if you need help with the NASDAQ, feel free to talk to me. You got stopped out. I'm not surprised. Small triggers against it, guys. That is horrible on the NASDAQ. If it's really going to go up, I'll get a reversal bar on the correct side of my small triggers. Sometimes I'll put a buy stop order right there. It has to go from support, these one-to-ones, and I'll say if I take a shot, well, not anymore. I'm on the wrong side of everything. These small triggers would have kept me out of the trade. It hasn't broken yet. Everything is still up. All the triggers are above it, But on a smaller, faster chart, I just don't know. There you go. There's your first close on the correct side. Doesn't mean that it's going to win, but if it's going to go up, that close on the correct side. C-Dub, they don't always match. I try to. If the if my entry chart is red, I just don't see any reason to fight it. I love it when everything matches up. When everything agrees, life is easy, guys. When they don't agree, you're fighting something. And Cav, it was a great look, right? That's the one right there. That's y'all's little NASDAQ trick. And then the S&P, not the best momentum. No, you can't. Not the best momentum. Not the best momentum. Loss of momentum. And my areas are on the wrong side of the triggers, guys. So not only is rule number 1 not in effect, rule number 3 isn't perfect. And if I'm just speaking to myself in terms of advantages, and I'm putting it up against momentum, a clear path, in an entry area, is a clear path enough to get me into a trade? I don't think so. Right? If I go through my checklist, let's zoom real quick. If I go through my checklist, is the market coming from a good top or bottom? I'm not even sure, but we'll say yes. Do I have odds favorable momentum on both charts? Well, that's a no. Terminations? That's a yes. Area inside? That's a no. Am I willing to take a trade forfeiting half of my advantages, guys? Are you willing to take a trade forfeiting half of your advantages? That's up to you. Only you can answer that question. My answer is hell no. I'm in this to make money, guys, and hope rarely pays the bills. So that's 3 different charts. Look at that termination for the win on crude oil. Termination creates a full reversal. Full reversal creates odds favorable momentum. Odds favorable momentum is a 50-50 look. From the 50-50 look, the only area that I have inside of favorable large triggers is that one right there. That is my only rules-based entry. What does that mean? That means that if I got in at the 1-to-1s, I was way too early. If I get in at this fib, it's not a rules-based entry. The only potential entry that I have is at 70.98. We'll see what happens. What do you guys want to talk about? We've got an hour left. First hour ran over. In Kyle 06. How you doing today, man? What can I do for you? Bear Bull Beast, you got them all covered. Is there anything you'd like to talk about? Trader Va, Mr. Sanchez, Dwight, Lyle, Ron, Hammond, Cav, Walter, Joel, Scott, Mark, Andy, Donna, Cindy, GW, Steven, Wah, Rob, Haji, Sergio, Bruno, Soph, Tyree, Jim, Surgeon, Ryan, Solby. First day here, love it. So Bear Bull Beast, first of all, welcome to the class, man. It's nice to have you in here. We do the same thing every day. Every day, first hour, we talk about advantages, right? How about them? How about them Texans? Who cares about the Cowboys? How about them Texans? Actually, since I live in Dallas, I root for the Cowboys after the Texans are done. Same way I did Browns. So every day, Bear Bowl, we talk about the rules, and that's really the first thing that we do is we talk about advantages, and then once we talk about the advantages, we go through entry points. I mean, as long as it's providing an opportunity, Mike Lynch, absolutely, I'll do it every time. And since we're not getting pictures in, we're looking at the live market. And guys, if I say something, let me know, right? If something doesn't jive, let me know. But do you see how I always go back to rules? I always go back to, do I have momentum? Do I have a clear path? Do I have an area inside a favorable large trigger? And the reason that I do that, the reason that I talk about that every day is because I want you guys focused on advantages. I want you guys so into insisting on areas inside a favorable large trigger, so into wanting this momentum that every time you speak about it on a chart, every time you look at a chart, you can stop saying, I hope I have a trade. I think this is a short. I want this to be a short. Um, where at, Ron? In crude? It didn't come together. Large triggers aren't a full bar away. But if you start talking to yourself about, these are my advantages, this is what I have to have, you put yourself in the position where there's only two options to get into the market, guys. Either your rules are met or your rules are not. And those are the only two options. Either my rules are met, I'm going to enter the trade. My rules are not met, I'm going to sit on my hands and do nothing. And it eliminates a lot of hope. With this much momentum from a good top, the hope entry is I hope to hell these one-to-ones hold, and I'm going to try and go short. But the reality is these large triggers behave as a correction, right? This is a moving average, and average is correct. And when I have a bounce line inside of the average, it's easy. And that's just too big of a gap. So if I look at my triggers, that's too big to this area. That's it for me. For a rules-based trader, that's it for me. Um, and it doesn't mean that it can go down or that it won't go down, won't go up. It just means that it's not my trade. And at 10:07, there was a gap theory at about 9:57 right here. What's a gap theory, guys? This is what Ron's talking about. Let's turn it into a lesson. At 10:07, oh, you're talking about when it closed the gap. I got you. So guys, if price accelerates away from the large triggers, if it screams away from the large triggers and smacks into something, if the large triggers remain a full bar away, meaning that there is room for an entire reversal bar to get back to those triggers, this is what we call the gap theory. And the gap theory, oh yeah, I saw that one. You took the short back down. Aggressive. Well played though. I said that you were just showing off. I said Ron's just showing off at this point. Guys, this gap theory, for the new user, it keeps you from taking the long because you know that it's likely to close the gap. For the new user, it keeps you from taking a short because when it hits that mid band and there's room to the large triggers, it's likely to close that gap. And you see it all the time. Whoops, let me pull it up. You'll see it going long, going short. We reach all these areas, the large triggers don't follow. Don't go long, even from a good bottom. Don't go long, even from a good bottom. And as you grow with the software, you may develop patterns where, because of your awareness of the gap theory, because of your understanding of the expectations, you may turn it into a quick trade, going back down to those triggers. And that's what Ron did. Um, and guys, this is really aggressive. That's odds favorable momentum. That's everything up. And he went short. And that's just chart reading. Turned into a play day. Awesome. It's beautiful. You take your momentum style up to the trouble area, and then when the trouble area starts to stick, you take it right back down. That's next level. But it utilizes the gap theory. It utilizes the gap theory to talk about it, to see what's going on. You guys, we're still in that area, right? We're kind of in limbo. If you went short off the one-to-ones, you're starting to get nervous, right? And you're just working. You're wondering. So let's see what happens. We'll come back to it. There's chili dogs on that level. It's my favorite. So there's your NASDAQ trade, right, Cav? It waited. It did pull back. It did make it. And then Cav's posting right as I say it. And Cav says, you know what? It's likely to hold. I'm going to get in. I'm going to keep a stop in place. First one gotcha. Second entry on the close on the correct side, and you take it all the way up because the large chart said. And then the even less aggressive, but the exact same entry, Cav, is let the small triggers roll. Let a divergence print. Same entry. Maybe D-Rock. I don't know. And then Cav, when we get to the pivot stop out with weak triggers, no more, right? Beautiful trade, Cav. Freaking awesome. You took a great one. It just didn't work. So you remained a little patient. Does that make sense on the small triggers though? Letting the small triggers get in the direction of the trade? You almost always get the same kind of entry, I think. D-Rock, let's see. Yep, and now it's outside. And now the midband is like a tick or two, right? So we can be a little calm. Those little yellow entry areas, where do you see yellow entry areas or entry arrows, Andy? They may be drawing them on their chart. Was it in Cab's picture? Or was it GWC's picture? These arrows? And GWC, how did I miss that? Sorry. Everything says up. The momentum is good. You take the momentum style entry, and then you add on to it, and you just get paid. GWC, nice trade. The only time they'll print is if you have them set to print. So for this, for example, if I took a short trade, it'll print. See how the large chart said down? Very nice, GWC. And because the large chart said down and there was no divergence and it was a 50-50, but my areas weren't perfect, I could wait for a reversal bar, right? And I could establish my risk, and there's my first target. And now I go break even. And where are we going? All that momentum? What do you think, guys? 1-to-1 a safe bet? Let's see. But do you see how when it's not perfect, you can wait for a little confirmation? We had a good top. We had odds favorable. We just didn't have areas. But Andy, it pulled back to the triggers, right? And guys, this is the biggest thing, and I can't stress this enough. Your trigger lines are moving averages. Your trigger lines are where we expect the market to correct. On the large chart, you see it a lot, right? It corrects back to those triggers. That's what gives us the gap theory. When there is a bounce point inside of the large triggers, that's your perfect entry. But what if the rules are amazing and the entry isn't perfect? So check this out, Andy. This is way below the correction point, right? It might create a stutter, but I'm expecting price to create or to correct to the large triggers. Here's another example. Whoops. It may stop it, but I'm expecting price to correct to the triggers. Well, inside the triggers, I don't have an area. So what's a little safeguard I can give myself? How about if I take a reversal bar? What if I wait for it to correct to the area and then head in the direction of the trade? Well, then I can get in and I can manage accordingly. And now I have divergence on a 50-50 trade, but it's from a good top. But now my window of opportunity is very manageable, isn't it? Now my window of opportunity is 2 lines wide, but it's divergence on a 50-50. That's no divergence on a 50-50. That's a much better look. Does that make sense? So sometimes a little bit of confirmation, A little bit of confirmation through a reversal bar when it's not perfect helps out. Let it correct to the triggers. And when there's a bounce point inside of the triggers, well, that's just money, guys. That's rule number 3. That's how we get paid. And then Andy, you take it at the triggers. You say it's probably going to correct to the triggers, but from a good top and tons of momentum and no divergence and strong triggers, I'll just let it do it and then I'll take a shot. Andy, I love everything about this. You're in at 90 flat. You make $150 on your first contract and 200. That's a $350 trade, Andy. With the advantage of momentum, that is a beautiful chart read. Awesome execution. But it's got to be that understanding that price loves to correct to the triggers, right? And that's what keeps you from jumping in early. That's what keeps you patient. Does that make sense to everybody? And then when divergence prints, it's not, it's just years. It's 20 years. Nothing's new. That's the beauty of it. And then if you took it with one divergence from the area inside of favorable large triggers, guys, that was where our profit target was. I didn't hold on to it because I got a ton of stuff to say. First shot was a little outside of the rules. Second shot from a good top, I'll take that 50-50 all day. And notice that every trigger is pointing down. Guys, that was easy, easy money. And now we're into the trouble spot. Does it work? The answer is yes. Is the methodology sound? The answer is yes. Does the education work? It must, because you guys are killing it. The only thing that I can't provide you, and I'm saying this because I know I have day one people in here, the only thing that I can't give you is experience. The only thing I can't give you is repetition. The only thing I can't give you is seat time. The easiest way to get to where you want to be is to take a lot of pictures, is to take all the pictures, to get as many pictures as you possibly can and write on them, scribble on them. Talk about what you see. Talk about the advantages, the disadvantages. Talk about what looks good, what doesn't look good. And drop them in the room and get a little feedback. Hey, this is what I saw. This is what I'm thinking. This is what I wanted. This is what I hoped. This is what I wished. Hey, Mark, everything said down and I got out right here because I got scared. Was that right? How do I do this better? I got out at this little blue line because I was terrified. And then we're going to have that talk. Well, look at the momentum. What about this chart said that it wasn't going to go down? And let me show you guys something. And this is why we talk about momentum first. Watch this. Boom, boom, boom. You guys have seen my class, right? We've talked about momentum. Is there anything about the triggers that says the buyers have a snowball's chance in hell of fighting you? Is there anything about these triggers that says worry? Well, Cav, I'm going to disagree with you a little bit. Because if we weren't coming from a good top on a 50-50, that one divergence can be detrimental to the new user if they don't know how to use it, if they can't get it at the right spot and manage. It was coming from the good top that starts. But guys, when I used to jump ship early, my brother would do this, and he'd say, Mark, what about these triggers tells you that that market's not going down? What about these triggers instilled fear in you? What about these triggers? Or on the flip side, Mark, what about these triggers said go long? Why on earth did you try to go long because of a blue line against these triggers? If you focus on momentum first, you'll be absolutely floored at just how easy your life can be. And Cav's right. With screaming triggers, it breaks areas. Screaming triggers moves down. And when you have screaming triggers coming from a termination, is that to the tick, guys? Is it just me? Or did that market, it went one tick above. One tick above. And you guys knew about that big fat red line. since 10 a.m. It was absolutely no surprise when price reached it. It was absolutely no surprise that it might hold because the triggers remain below. So it should be no surprise that that one worked. Pretty cool, right? Learn one, take it to the next. That's all you got to do. And Ron says this is the best system you'll ever find. These guys will teach you how to quit your job and start enjoying life. Amen. Chili dogs on the beach, guys. What makes it hard? What makes trading difficult? Doing absolutely nothing when there's nothing to do. Guys, doing absolutely nothing when there's nothing to do is the hardest thing that you'll ever do. But the quicker you get to that point, the quicker you get to the point where you can sit on your hands because you don't have advantages, the quicker you're going to get to where you want to be. And I'm just going to share some stuff because we don't have any questions and the market's not really giving us anything on crude oil at the moment. One of the biggest things, and I'm going to share a little story about when I was in a different life, guys, and I worked for a restaurant. And my strength, believe it or not, was creating checklists, creating systems and routines, and it was so effective that they would send managers to me from all over the country when they were opening new restaurants, and they wanted them to train with me because one of the gifts that I had was teaching people to be successful through simplicity, and that's just kind of what I've always focused on. One of the reasons I like teaching this class so much. And just like you guys, I would get a brand new manager and I would hand them this checklist and I would say, all right, bear bull beast. If you can do me a favor, take the next 30 days and adhere to the checklist. In 30 days, just get great at it, right? Build these repetitions, understand what you're looking for, when to do it. You're never going to have a problem and you're creating muscle memory. And everybody starts with the checklist, and everybody does great with the checklist because the checklist keeps you out of trouble. It keeps you from taking silly trades. It keeps you from fighting things that you shouldn't be fighting. And typically, people right around 2 or 3 weeks in, they're like, I've got this. I know what I'm doing. I'm a badass. I don't need the checklist anymore. And that's when people start taking losers. In the beginning, they're taking winners because they're following rules and they're posting in the room and they're getting feedback and positive reinforcement and everything is great and they're doing wonderful. And then everybody tends to turn into this little secretive trader. You know what? I'm going to try this. I'm going to do this. I'm going to break this rule. I'm going to be a little more aggressive, but I'm not going to show Mark because I'm like your grandma. Nobody wants to disappoint me. But guys, I don't get disappointed. I love you all. Um, but what happens is you begin to stray from the path that brings you success, and you find that there's less and less success. And for the average user, it's very dejecting and it's frustrating, and it can't possibly be the software or your decision making, or it can't be your decision making. It has to be the software. It has to be the market. You stop posting pictures. You stop getting feedback. And when I was training managers, we called this the 30-day stupid. And I know stupid's an ugly word, and work through it. We're all adults. But the 30 Day Stupid had new managers losing money. It had them pissing off employees. It created gaps in schedules, and it really created a very difficult situation in the restaurant. Um, and then I had to sit them down and talk to them, and we'd have a moment. And I'd say, hey, Bob, Joe, whoever you are, I want to remind you that for the last 30 days, you have been 100% solid. I've never seen you without your checklist in hand. And you haven't made a mistake. You've hit every mark, you've done everything the way it's supposed to do, and you had this really easy shifts and a lot of success. Why did you ditch it? And the answer was always the same. I figured that I had it. I thought I knew what I was doing. And guys, your checklist is your safety net. And you're going to think that you have it, but the reality is it takes 60, 90 days to really get good at this, to make it second nature. So stick to your checklist, guys. Always, always, always stick to your checklists. And eventually you'll know when it's time to break outside of it. But if you break outside of it, you've got to be willing to come back in. Um, D-Rock, everything says down, good top, closes the gap. Man, D-Rock, what if that white bar was a breakout bar from support that didn't break in the market, and that was your first indication that the market is about to rocket to the upside? Did you consider that? I know. The white bars are great, guys. And I guess I probably didn't say it right. There's a white bar into the area as well, and it's followed by the signal, right? White bars are cool. White bars produce these signals, um, and that makes more sense, right? It closes the gap to the triggers. The mid band is right there. You come through. These white bars will kick your ass 1,000 times, D-Rock. If you're looking for market flow confirmation, look for the signal after the white bar. Wait for the signal. It's almost the same entry. But this way, you've got that confirmation at the area with the rules met. Um, I guess I'm just saying that the white bars are awesome, right? And you can anticipate them, but it's tough. And it creates a little bit of problems for new users as they get in with market flow because white bar doesn't guarantee a signal and it doesn't guarantee, um, and I may not be in your head as much as I thought. But I like that. I like the confirmation a little better when you don't have areas. Was trailing second contract at a reversal bar, holding to fibs, but caught me on the reversal. Should have kept stop wider at break even. Such strong triggers. And that's perfect. So I know you have reasons, right? I'm going to pinpoint exactly why you said you entered, though. And this is why I'm doing this. And D-Rock, I feel comfortable with you, so I hope you don't feel like you're taking a beating here. That's why you said you got in. That's a weird reason, isn't it? And this is for new users, guys. This is for new users, not for D-Rock. D-Rock knows. Because I know that D-Rock got in because the termination caused the full reversal, because he had odds favorable, because he waited for the correction. That just told him when to get in, not why to get in. So when you're a new user and you're watching people do things that maybe are a little bit outside, when you're watching people do things that maybe don't line up with the high probability rules, know that there may be more to it. And it's okay to ask the question, Mark, why did he get in on a white bar? Why did that white bar get him in? Because if you assume that you know, you're going to miss out on all the other reasons that he was willing to take that white bar. And I've seen new users do this a lot. They try to mimic the people with more experience. They try to mimic people with more seat time. And what happens is they only have half truths. They only know a little bit about what's going on, not the whole thing. They make assumptions and they get frustrated when they can't make money the way D-Rock makes money, or they can't make money the way Cav makes money. And they completely discount the time it took them to get there. So that's the only reason I'm doing that, D-Rock, is it wasn't the white bar that got you in. It was all the amazing looks, and then the white bar was the catalyst for being willing to pull the trigger where he pulled it. And I love it. So, but just education room. Sometimes I go off on little tangents, guys, because I want everybody to get the most out of it. And you guys are going to get to be right where D-Rock is. D-Rock showed up day one. He's like, hey, what the hell are you talking about? And he posted a ton of pictures. And he asked a million questions. And now D-Rock's a rock star. He's got a tour bus and groupies and big old pyrotechnic show. And everything's awesome. I love this class too. It's fun. Flat triggers, smalls are through, large below, smalls are through. Did this one have divergence off? Oh my gosh, look at that. Divergence off the bottom kills a 50-50 trade. Divergence off the top kills a 50-50 trade. How many times can that happen in a day before you believe it? I don't know. So guys, we have about 30 minutes left. And I'm starting to ramble a lot, not gonna lie. I feel like I'm rambling, and that's okay. Sometimes the rules aren't met. That's where I kind of rely on you guys to talk to me because I start sharing things that I have. So I want to go through this, and this came through. I had a gentleman, and I appreciate it when you guys are struggling and you talk to me. So, and I really do. Like, if you're having a struggle, even if you don't want to put it in the room, email me or message me on Discord or catch me on Skype. Don't sit silently if you're having a struggle, whether it's something that you need help with. Maybe you're like, man, I think that was utter bullshit, but I don't want to call them out in front of people. I'm okay with that. You can't hurt my feelings. Send me an email. But the key to everything that we do is having a foundation, having a solid platform from which to grow, and then understanding the basics, getting those basics in, and then growing from that foundation just a little bit every day, right? Getting a little bit better every day. So for the new users, I do blanket. I blanket with very conservative rules. I blanket with rules for a high probability trend trade, recognition of advantages, a solid plan that optimizes your chances of success. As the new user learns to read their indicators, so for the new user, it feels like all termination conditions are bad. For the new user, it feels like not having any momentum is horrible. For the new user, that areas not inside of favorable large triggers are asinine on why on earth would you ever take those entries. And we do that for the new users because it increases the likelihood of success. If it's everything is a hot stove that can create a problem for the new user. And they're not always bad. These things aren't always horrible. And as you learn to get the experience, you'll know when the exceptions are there. You'll understand when the exceptions are present, and it's okay to take them outside. Just open CL thoughts. Right click and hit refresh all data, CW, and see if that works for you. Right click on the chart and refresh all data. See if that works for you. It looks like you're not connected, and it may just had a little slip on tick data. And then, guys, this goes on just like anything. The more time you spend of it, the more you're going to see. And this opens the doors for you. And I can tell you right now that I take trades now that I would never have even dreamed of taking a year ago. And I'm several years into this. And I see things now that I would have never dreamed of seeing when I first started. But one of the biggest challenges is when a new user sees older, more experienced users taking trades that don't fit the rules. It creates confusion. And that's okay. I've had people leave my room pissed off because Ron won't take a high probability trend trade. Well, Ron's breaking the rules, and I'm mad at Ron. And Ron, I hope you don't mind me using you as an example. And this is absolute crap because he's not following the plan and he's getting paid, and I'm so mad at Ron. Guys, don't be the trade police. Um, why did they trade into termination conditions? Well, they probably know. Why didn't they have momentum? They're breaking the rules. Why can't I? The short answer is that they have the repetitions to do it. They have the patterns in their heads. They've formulated a plan. They've taken their pictures. They've gotten their feedback. And what they found is that there's opportunities where rules can be broken. And you grow. And then you start watching these patterns and you start taking these pictures and you start getting feedback and you start seeing more advantages rather than the things that are scary, right? Instead of seeing the hot stove that hurts your hand, you're going to make some jambalaya. And with a little less than perfect momentum, you can still get in and you can manage because now you're a chart reader. And you've got to learn the process that yields the results, and then the results follow, guys. And that's why the KISS plan is so important. So I'm saying this because I know I have new people in the room, and you're going to see trades that aren't high probability trend trades, and you're going to be tempted to be at the finish line before you spend time learning to run the race. Just relax, enjoy, ask a million questions, post a million charts, and get feedback on everything that you do. And you'll get to this point where you don't even know how you got there. You'll be like, holy crap, did you see that trade I just took? That's not high probability, but I've seen this 1,000 times and it's amazing. And I like that. Don't practice till you get it right, guys. Practice till you can't get it wrong. Um, you got better people than them that don't like you. And confidence grows exponentially. And that's another thing. And thank you for saying that, D-Rock. There's an old adage that confidence is the memory of success. So the KISS plan optimizes success. It optimizes your opportunities for confidence. And then eventually you just grow. And it's fun to grow. It really is. It's fun to see where you've been and what you're doing. So that being said, for my new users, I know you want to sit on the sidelines and absorb it. And you probably don't even know what questions to ask yet. That's okay. Ask them anyway. Ask anything. I love the conversation in this room. Ron is the man. Ron's living the dream. Ron has a solid plan with very few trades in it, but it involves chili dogs and walking on the beach. And then slowly, day by day, right? Tortoise and the hare. This is a good one. This is from the late Mark Douglas. Because I will never tell you guys that you're going to win 100% of your trades. I'm never going to tell you that. That's crap. I'm going to teach you to have a statistical advantage. I'm going to teach you patterns that win more than they lose. So when you stopped expecting to win every trade, guys, you're going to start winning most of your trades because you're not going to talk yourself out of stuff. Go do some pirate stuff, Ron. You know, it's funny. Tattooers have referred to themselves as pirates forever. So maybe that's why we get along. Start worrying about the execution of the method. Don't worry so much about the results. You'll be amazed when all you're focused on is the right entry, how easy. 70 to 80% is good. Andy, I know people that trade in the 40 to 50% win range and make more money than they could ever spend. I've met traders that trade in the 30% range, but their management is so good that they're making money. Um, so it's all about advantages. Fear, all that good stuff, guys, that's self-manifested. You create that through expectations. If you expect to win every trade, you're going to be pissed off when you don't, right? If you expect to lose everything because woe is me, well, you're probably more likely to do it because you're just going to throw it out the window. Who cares? I'm going to lose anyway. So be confident, look for advantages, talk about advantages, and get in there. Guys, not a darn thing to do on the S&P. Crude oil made it to the key fib area. Some of you liked this one, some of you didn't. Mark Douglas changed the way I thought about trading too, D-Rock, very much. And do you know what the biggest lesson I got from Mark Douglas? Is that the market is ticks. The market is nothing but fluctuations. That's it. You have zero control over it. There's only up and down. The market isn't anger, it's not sadness. The market is nothing more than up and down ticks. So learn when those up and down ticks make patterns and trade the method, not the desire for profit. What else do I have in here while we're talking about it? This is a good one for you guys that are breaking rules. This was presented by a gentleman in the other room, and this is actually about 10, 15 years old from when he started with Nexgen, and he's still trading over there in the trader's room. He's still with Nexgen. He trades about 9 months out of the year and spends the other 3 months vacationing. But these were his penalty box rules. And these were just what he would do if he broke his rules. He had his rules, he had his plan. And if he missed a good entry, if he hesitated, if he talked himself out of it, he gave himself a minute timeout. No matter what happened next, he couldn't take a trade. And if he got in late, if he second guessed himself, he gave himself 2 minutes. And if he jumped out that wasn't a part of his plan, he gave himself 3 minutes. And if he created an arbitrary stop, something that didn't make sense in the middle of nowhere, not in an area or price action, he gave himself 5 minutes because then he knew that emotion and fear was taking over. Exiting late, hoping areas break rather than just saying, hey, I'm at a termination, let's get paid, wait for the next one. Trading against direction was worth 10. Trading into an area was worth 15. Doing both, he would kick himself out for the day because he knew that he was making bad decisions. I always loved this. And guys, this has been around for 20 years, 15 years. So by his standards, trading into this area would be an automatic timeout. That would be it. And what would that be? 15 minutes? If he took this short trade, he would have to sit out for 15 minutes because it takes away the potential for success. Pretty cool, right? I've got traders that put ping pong balls in a jar, and every time they take a drink, it goes from one jar to the other. And they tell themselves, I've got this many trades, make them good, because over trading is their thing. Guys, normally we're looking at trades, we're looking at pictures, we're answering questions, but since we don't have any, I'm just going to keep going. How do I know I'm maturing as a trader? Oh, Collie, that's brilliant. Douglas caught your eye when he said, even if you have a high probability, every trade is still a 50-50 once you're filled. So we have to manage and assume nothing. Oh, that's brilliant. I like that. So one of the things that you can do, guys, is first manage your risk and manage your reward. That's how you know you're maturing. That's what Nexgen does for you. You manage your risk through advantages. You manage your risk through great entries, through understanding where the market shouldn't go. And it will relax you when you trust your plan because you won't force trades and you're not doing this for adrenaline. And you follow your trading plan. And I think the most important one, because I'm a hippie, is your worth as a trader and your worth as a person are two separate things, guys. You're going to want to beat yourself up during this learning process. It won't do any good. It won't serve you well. Allow yourself to be new. Allow yourself to make mistakes. Give yourself some grace. Um, and then Cab says, termination reverses the market. All my triggers are green, and I'm right here at the correction point. Let's go long. And notice that he doesn't hope and hold. He gets out right at that big pink line that may cause trouble for him. I love it, Cav. Utilizing the idea that a termination that creates a reversal establishes a huge advantage. Is it high probability trend trade? Not quite. Not quite, but it's a hell of a good chart read. Eventually, you will go from not quite high probability to hell of a good chart read. It just takes a little time to get there. Nice one, Cav. I like that one a lot. And guys, just because you can't be Cav doesn't mean that you can't learn from Cav. Doesn't mean that you can't look at his charts and all those great winners and say, wow, look at that odds favorable momentum that led the way. Look at that clear path that gave him an advantage. Look at the termination that reversed it. There may be something to this. Price reaches a divergence high and all my triggers remain below. Isn't it awesome that none of you tried to go long on the NASDAQ? Not into that ugly spot. No momentum. Colors don't agree. Divergences everywhere. Look at the fight, guys. Get involved with the class. Amen. Termination, 3 divergences in the same location. The people that post the most make the most, guys. It's been proven over time. It has been proven time and time again that the people that post the most make the most. They get to where they want to be the most. I'm going to share this with you guys too. I don't know why I opened it. This is called Emotion-Free Trading. My brother gave me this book because I may have had a little adrenaline in my life. In Emotion-Free Trading, this is an awesome book. It's 100 pages. I'm not endorsing it. I'm not affiliated with it. I didn't write it. I don't know who wrote it. But emotion-free trading does a couple different things, guys. It reminds you that being in the right mindset is huge. It reminds you that profits are about taking what the market offers, not what you want. It reminds you that every time you choose to take a trade, you should take a trade that's in your best interest, which means that advantages are there. It has a little drill that says, hey, stop going for home runs. Make a little money every day and get used to the idea of making money before you've been compounding. So I dropped that one in there. That's a great read if you're looking for stuff to read. 7 Habits of a Highly Successful Trader. Great read if you're looking for something to read. My brother made me read that every day for 30 days. Paul, 2 divergences. Not coming from a fib. It's still a good top. Odds favorable. Looks beautiful. Um, no divergence, no terminations, best momentum ever, clear path, right in at the area inside of favorable large triggers. Stop where the market shouldn't go. Is that gold? That's gold. I like that, Paul. Does everybody see why Paul did what he did? That's a termination that created a full reversal. That full reversal gave odds favorable momentum and a clear path. That clear path with odds favorable gave a no divergent strong trigger pullback to that little pink line right inside of favorable large triggers. Paul, I hope you get paid all day long on that one. Nicely done. And then D-Rock says, I don't post as much as I used to, Mark. I actually trade a lot less, only take the best. And D-Rock, that's what it's for. In the beginning, we all take a bunch of, I'm doing the quotations with my fingers, garbage trades. We take a lot of rule breakers. We take a lot of nuances. We take a lot of almost. We take a lot of maybes, ifs. And and I didn't know the difference. I didn't know the difference between a maybe trade and a good trade. I didn't know the difference between a high probability and a low probability. And I had to post in my brother's room, which is terrifying. That's my brother. And everyone knows that my last name is Novak, and I wasn't smart enough to change my name. And I had to put myself out there and get that feedback so that I could. So, um, D-Rock, you're at the point where you don't need to post all the time, right? You're not here to show off. You're here for education. So when you have a question or something that creates growth, you'll drop it in the room. And I think that's great. Focus on your trading. You're a good enough chart reader. You can do that. So you're doing exactly what we want. Back when I was a personal trainer, um, I used to always tell my clients, my goal is for you to fire me in the next 3 months. My goal is for you to not need me anymore. My goal is for you to be so comfortable with getting yourself right that you don't need me to walk you through everything step by step. And of course, I always told them, I'll tell you guys this too. I want you to send me someone else to teach. So when you hit that point, guys, I want you to call your salesman and go, hey, this is Bob. And Bob needs to learn what I learned because he's my best friend, right? And D-Rock, I think that's how you got here, was somebody doing that, saying, hey, D-Rock, check it out. This is what I do. You want to learn? And I think it's working out okay. And then Cab says, if you're in this class, you're here to learn. Start blowing up the screen with trades. Amen. Don't worry about how you feel or how you're going to feel when you start getting better. Amen. Paul, first target filled. Love it. And probably no risk on the trade at this point, huh? Nice. Good to see you posting in here, Paul. What do you guys think? Termination, 4 divergences, and it just blasted right through. Are you guys a believer in rule number 2 yet? From fib to fib, this is where the money gets made. Got 10 minutes, guys. What do you want to talk about? Gosh, that's pretty, Paul. And Paul, you know that green line, if there's going to be a divergence pushing that thing up, that's probably where it's coming from. Nicely done. Nicely done. Haji, let's see what we got, bud. Haji says, I didn't catch this one because it wasn't perfect, so I took this one because it was full of kickassery. And then you're asking where would be a good spot to exit the trade. Haji, awesome question. And there's a couple answers. So in the beginning, if you're in at 70.79, that's 59 right there. This, let me put a box around it. Haji, that's a $300 trade. How do you feel about that? Would you be mad? It's in the middle of nowhere, right? But what does 50.59 also line up with? An area on your large chart. So for the brand new user, 300's rad. I would take that all day long and feel good about it. As you grow, you're going to say, there is so much momentum in this trade and everything is screaming down. Maybe I'll hold it, right? Maybe I'll try and let it run a little bit more. And if you're doing that, you're going to notice that it's a 50-50 and divergence prints. And maybe that 300 just initially turns into about 400, right? And you're feeling pretty good about it. And you're like, yeah, I just turned that 300 into 400. Or maybe you say, instead of getting out on the first one because everything's perfect, I'll take my first contract out at 200 and I'll move to break even and I'm going to hold that second one for the fib because everything is screaming down, which means that I'm willing to ride out this little retracement as long as it doesn't give me three divergences, and I'll hold for the fib. And your management's going to grow all the time, Haji. Hey, have a great one. Isn't that awesome? What if all you did, Sab? I hope so, Rob. I'm looking forward to it. Hey, Sab, what if all you could manage every day was this one right here? What if every day, three times a day, the best you could do is $100 and break even? You still made $72,000 that year, right? You do 300 twice a day. Oh my gosh, a $600 day? That's $144,000 a year. So it's all about giving yourself the highest chance of success and getting paid, guys. Remembering that we're in this to get paid. And then, Rob, if you need any help, let me know. Guys, I get excited about you guys that want to learn. I get so excited about you guys that want to show me every freaking picture um, because I get to watch you get better. And then, Collie, you think it's the same in golf and tennis. Doesn't matter how good you get, you still go off the rail, the basic, too creative, your coach reels it back in. That's it. We all do it. You guys ever go out and shoot in the 80s in golf, you golfers? You're like, man, I just shot an 85. I'm the baddest mofo to ever live. And then you get on the golf course next time and you shoot 105 because you forgot to do all the stuff that got you to 85. I do that darn near every time I play golf. And you need someone to reel you in. Guys, I text my brother in the middle of a golf round. I don't know what the hell I'm doing, John. I keep hitting right. He goes, hey, try this. And then it saves my back nine. So coaching is great, guys. Every professional athlete you've ever seen in your life has had a coach. Um, Everybody that's successful in business has typically had a mentor. Take advantage of it. That's what we do here. We're here to help you get to where you want to be. Terminations for the win, guys. Isn't it amazing that you have a rule to keep you safe, that you have a rule to give you these advantages? Take advantage of the system, guys. Post. Post a lot. NASDAQ's caught in a range. Is it going to go up or down? Hell, I don't know. I don't have to guess. I'll just wait for a clear path. I'll wait for momentum, and then I'll look for a pullback. It really can be that easy, I promise. And this is what I'm going to end it on today. Because there's people in this room, and I know there's people in this room, that are watching 7 markets, that are watching 8 monitors, that are looking for 20 trades. Have you guys ever seen, what is it? The Last Samurai? In The Last Samurai, he talks about little Tom Cruise is trying to beat people up and it's not really working here. And he says, too many mind. The little kid runs up to him and he says, too many mind. He says, you're minding the people watching. And you are minding the sword. And you're minding the enemy, right? Too many mind. It doesn't matter. He knows how to trade 12 markets. If you're not making money every day and you're looking at 8 monitors, you're shooting yourself in the foot. You're confusing yourself. If you aren't making money every day and you're looking for 4 different trades, you're shooting yourself in the foot. If you're not making money every day, well, then that may be the problem, right? Too many mind. Keep it simple, guys. Keep it simple. It doesn't have to be difficult. I watch one market. I really do. And I don't have any problems hitting my goals most days. I watch one market. I got 2 or 3 looks that I trade. So that's a good deal. You know, we were walking through the store the other day and my wife's like, hey, do you need another monitor? Because they were on sale. I was like, hell no, I don't need another monitor. I got 2. I only use one when I trade. I don't have multiple markets up in front of me. I'm not looking for every trade. I'm looking for the best trade. And it means that I spend a lot of my day doing not a damn thing. And it pays dividends almost every day. So the book, Paul, Emotion Free Trading, me too. I'll drop it in the room one more time for you guys. Um, Too much emotion will ruin you. Think small gains. In that book, they tell you take 30 days to make $250 a day. Take 30 trading days to make $250 a day. And everyone's like, but I can't make any money on $250 a day. Guys, that's like 7 grand. That's pretty good. So anyway, that's it for me, guys. That's class. That's it. We're done. I will be back tomorrow morning at 9 a.m. and we're going to do it again. And we're going to do it every day this week, and we're going to do it every day in 2024 and 2025 and every day until you guys get to where you want to be. The only way that I can help you is if you post in the room. So I love seeing your winners, but I want to see your losers. The only way I can help you is if you ask for help. So post in the room. I'll see you guys tomorrow. I am going to post up today's video. It will be available.